Good morning, ma'am. We are live.
Good morning. Hello.
Yes, ma'am. We can start the meeting.
We can start. Okay. Let me screen. Fine. So very good morning. So this is for CA final. I'm going to take some important topics for the upcoming examinations, May 2024 examination. So we'll start with supply under GST because this is the liability attracting event for GST. When GST is levied is when there is supply of goods or services. So only when we get to know what is supply, we'll be able to understand the other chapters. This is the most biggest section as well as most interesting and challenging chapter. So let us get into that. So in supply, we have section 7, which deals with supply, and schedule 1, activities to be treated as supply even if it is made without a consideration. Schedule 2, activities or transaction to be treated as supply of goods or services. Schedule 3 is activities or transaction which shall be treated neither as supply of goods nor supply of services. So let's get into it deeply. So this is a bird's eye view of the chapter supply. So what all is coming under supply is in this one chart. So it means supply under GST, we can split it into two: treated as supply, not treated as supply. Under treated as supply, we have section 7.1a, 7.1b, 7.1c, then 7.1 capital A, that is schedule 2, and not treated as supply of goods or service, we have 7 subsection 2. So let us first start with 7 subsection 1 clause A. Supply includes all form of goods, supply of goods or services, or both, such as sale, transfer, barter, exchange, license, rental, lease, disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. So when we read this, we have to understand that supply includes all form of supply of goods or services. That means if at all a transaction has to be charged to GST, it should either be supply of goods or services or both. So it cannot be anything else. So when it is neither goods or services, then no GST is applicable. So for that, we have to understand what is goods, what is services, then made or agree to be made for a consideration. So what is consideration? By a person, what is person, and in the course or furtherance of business. So all these 5 terminologies has to be understood in order to appreciate what is supply. So let us understand the 5 terminologies. So let us learn goods and services together. Section 2 clause 52 deals with goods and section 2 clause 102 deals with services. So what is goods? The meaning. It starts with the word means. That means it is an exhaustive definition. So when it starts with includes, it's an inclusive definition. It starts with the word means. It is an exhaustive definition. It says every kind of movable property. So that means immovable property will never come under goods. And services means anything other than goods. So whatever is not there in goods will come under services. Both goods as well as services excludes money and securities. So money as such is neither goods nor service. Securities as such is neither goods nor service. Both of them excludes money as well as securities. Now, what are the inclusions in goods? What are the inclusions under the definition of goods? Actionable claims. So what is actionable claims? any debt other than the debt secured by mortgage, hypothecation, or pledge. Any debt other than the debt secured by mortgage of immovable property or hypothecation or pledge of movable property to any beneficial interest in movable property not as in the possession of payment. So this definition we are taking from Section 3 of Transfer of Property Act 1882. So we have to understand then what is mortgage, what is hypothecation, what is pledge. So the term mortgage is in relation to immovable property. That means if you are taking a home loan, you give your home the security. For security purpose, you give the document as the security. So that is mortgaging. Hypothecation and pledge is used in relation to movable property. So why we need two terms for movable property? There is a difference between both. The term hypothecation, if it is where the asset remains with the borrower. Classic example is vehicle loan. So in case of vehicle loan, the asset remains with the borrower. Whereas in case of pledge, the asset remains with the bank. That is gold loan. So it remains with the bank. So until you repay all your debts, you will not get it back. So only once you repay all the debts, then you will be able to get back. So this is actionable claims. Growing crops. So actionable claims is any debt other than the debt secured by this. So any unsecured debt will come under actionable claims. Lottery, gambling, betting, all this will come under actionable claims. Growing crops, grass, things attached to or forming part of land which are agreed to be severed before supply or under a contract of supply. So growing crops we can understand, grass we can understand, things attached to and forming part of land. So whatever is attached to earth and it has agreed to be severed. Severed means cut. So wood, from where we get wood? From trees. So before it is supplied, it is severed, that is, it is cut from the earth. Then it is made into a proper shape and then it is supplied. So that is agreed to be severed before supply or under a contract of supply. So this is what is goods. What is services? Anything other than goods. So whatever is not there in goods will come under services, and it also excludes money as well as securities. So money as such is not service. Securities as such is not service. What are all the inclusions? Facilitating or arranging in securities. So we saw that it excludes securities, but for purchasing or selling shares, we need a stockbroker. So only through a stockbroker we can move for purchase or selling, or whether it is going to be lending, can be only through a stockbroker. So the stockbroker, whoever is arranging, like Zerodha, Sharekhan, ICICI Direct, so all these persons, when they are arranging for sale or purchase of shares, they charge a brokerage. That brokerage is a service. Facilitating or arranging in securities is a service. So that will be chargeable to GST. Activities relating to use of money or its conversion by cash or by any mode from one form, currency or denomination, to another form, currency or denomination, for which a separate consideration is charged. So activities relating to use of money. So whenever we are going to use money, say you go to an ATM, you take cash. So after 4 or 5 transactions, you may be charged some charges that will be chargeable to GST. Conversion by cash or by any mode from one currency, one form, one currency or denomination to another form, currency or denomination. Say for example, you have to pay a fees through demand draft. So you can go to a bank. If you have an account in that bank, through that you can take, or you can pay through cash or check and you can convert it into a DD. So there will be some charges. There, it is clearly mentioned for which a separate consideration is charged. So there is some commission which is charged, that will be chargeable to GST. Next, currency, you may go to a foreign exchange dealer or you may go to a bank to exchange your currency. So you are going for an official trip to US, you are exchanging your currency from Indian rupees to dollars. So there will be a commission which is charged. So that will be chargeable to GST. So this is what is goods as well as services. Now let us move on to what is consideration. So two definitions we have completed. So what is consideration? Any payment made or to be made, whether in money or otherwise. So it is not that you have to make only through money, it can be in kind also. The monetary value of any act or forbearance, that means money value of any activity, or forbearance means not doing something, that is also a consideration. Say for example, there are two persons who are good in singing. Say one person, both are in same locality, say Nungambakam. Say what happens is, say the Mr. A, he is already running a music school and he is successful. So Mr. B wants to open a music school in the same locality. What will happen? There will be a competition. Mr. A says, you don't open in this locality, you can open in any other locality. And he pays some amount for that. So that is also a consideration. In respect of, or in response to, or for the inducement for the supply of goods or services, or both. So in respect of the supply of goods or services, you are making the payment, and it is like whether by the recipient or by any other person. So it can be made by the recipient. It is not necessary that only the recipient have to pay the consideration. It can be made by the recipient or any person on behalf of him. Say there are three persons, Mr. A, Mr. B, Mr. C. See, there is a transaction between A and B. So B is the recipient who has to pay say 10,000 for the service. C already owes Mr. B 10,000 rupees. So B instructs A, you get it from C, the same amount you get it from C. So A gets it from C. So here the recipient is not making the payment, the other person is making the payment. So consideration is, the definition of consideration says that it is not necessary that only the recipient has to pay the amount. It is sufficient if I get the amount. It can be paid by any other person. Proviso. So what is proviso? Exception. Deposit given in respect of goods or services or both. Whether we have to check whether the same is applied towards consideration. So what is deposit? Say for example, we take a premises on rent. So we have to make advance payment, like deposit we have to give, that is refundable. After we vacate, they refund. So since it is refundable, it will not be treated as consideration. Say the rent is 30,000 and the deposit is 3 lakhs. So 30,000 monthly which we are paying, that will be treated as consideration, no doubt in that. But 3 lakhs deposit is refundable. So whether it will be treated as consideration or not is a question. Whether apply that deposit as consideration for the said supply. If it is yes, shall be considered as payment made for the supply. If it is no, shall not be considered as payment made for the supply. So that means we have to check whether it is applied. Say for example, after 4 months, we did not pay the rent. The landlord is adjusting from the deposit. So what will happen? The deposit money will come down. Say 2 months he adjusted. So 30 plus 30, 60,000. So no more my deposit amount is 3 lakhs. It is 2 lakh 40,000. So what happens? My deposit money will come down. So it is applied towards the supply. Then it is treated as consideration. That 60,000 which is applied towards the supply is treated as consideration. Otherwise, it will not be treated as consideration. Exclusion. Subsidy given by central government or state government. So any subsidy which is given by government, that will not be part of your consideration. Say for example, there is a government company where there are employees for whom food is provided. So the company is paying the food, the actual cost is 100 rupees. Say it is 20 rupees is only collected from the employees. Remaining 80 rupees the company is paying. So what happens, that 80 will not be included here. This is a subsidy by the government. So it will be only 20. Suppose it is a private company, then it will be included. So we have completed the definition of consideration. Let us see the person definition. 2 clause 84 deals with the definition of person. So person definition, what all it contains? Individual, HUF, company, firm, LLP, AOP or BOI. Any corporation established by Central Act, State Act, government company, any body corporate incorporated by or under the laws of a country outside India, cooperative society, local authority, central government or state government, society, trust, AJP not falling above. So individual is a natural person. Apart from individual, like HUF company, firm, LLP, all these are artificial persons. So AJP not falling above. AJP means artificial juridical persons. So except individual, everyone are artificial juridical persons. So what they are trying to tell is not falling above. So anybody who's not falling in this category, they may also be included. Any artificial person who's not falling in this may also be included in this artificial juridical persons. So person definition is exhaustive. Business. Section 2, clause 70 includes any trade, commerce, manufacture, profession, occasion, adventure, wager, or any other similar activity, whether or not it is for pecuniary benefit. So anything for that matter, trade, commerce, profession, all this will be included under the term business. Any activity or transaction which is connected with this or incidental or ancillary to this subclause A. Any activity or transaction is in the nature of subclause A, whether or not there is volume, frequency, continuity, or regularity of the transaction. So whether it is going to be a regular business or seasonal business, so it does not depend upon that. That will be treated as business. Supply or acquisition of goods, including capital goods or services in connection with the commencement or closure of business. So before even commencing the business, you're acquiring some capital goods or acquiring some services, then that will be treated as business. Provision of by a club, association, society, or any such body for subscription or any other consideration of the facilities or benefits to its members. So whatever club or association or society, whatever you're doing and whatever subscription amount you pay, that is for the purpose of business. Admission for a consideration of persons to any premises. So be it any theme park or any concerts or any exhibition where people are admitted for consideration, that is business. Services supplied by a person as a holder of an office which has been accepted by him in the course of furtherance of business, furtherance of trade, profession, or occasion. So whoever is holding an office, that will be treated as the service will be treated as in the course of business. Activities of a race club, including by way of totalizator or a license to bookmaker, or activities of a licensed bookmaker in such club will be treated as in the course of business. Any activity or transaction undertaken by the central government, state government, or local authority in which they are engaged as public authorities, this will be in the course of business. So we have completed the definitions of what is goods, what is services, what is consideration, what is person, what is business. So all the 5 terminologies we have learned. Now, supply includes all form of goods, supply of goods or services, or both, such as sale, transfer, barter, exchange, license, rental, lease, disposal. So what is sale? So the term sale is not defined under GST. So we borrow the definition from the Sale of Goods Act. So transfer of property and goods from one person to another for cash or deferred payment or any other valuable consideration. So that is what is sale. So whenever I sell goods, no more it is mine. So the property is transferred to the other person. So that will be treated as supply if there is a consideration and from one person to another, and it is in the course of furtherance of business. Say I'm into a mobile showroom, like my business is selling mobiles. So I sell a mobile for 25,000. Say Purvika Mobiles, they sell a mobile for 25,000. So that is a sale for Purvika and they receive 25,000 and it is in the course of furtherance of business. Transfer, the term transfer. So section 25 subsection 4 and 25 subsection 5 of the IGST Act talks about distinct persons and establishment of distinct persons. So A Limited, we have branches, various branches like say Chennai, Y Kolkata. So all these are in different states, Tamil Nadu, Maharashtra and West Bengal. So in GST, it is not centralized registration, it is going to be state-wise. If you're going to do a taxable supplies from that particular state, then you have to take a registration. So we have to take 3 registrations. So when we take a registration for a particular state, they are distinct persons. So from Chennai to Mumbai, I transfer some goods. That is a stock transfer that will be treated as supply because it is from one person, because they are treated as distinct person, though they belong to the same company. But since there are different GST numbers, it will be treated as distinct persons, and whatever transfer is made, that will be treated as supply. And in case if it is within the same state, say in Tamil Nadu itself, we have Chennai, Trichy, Madurai, Coimbatore, they are within the same state. It's not mandatory to take a separate registration, but if there is a requirement, we can take. It is only voluntarily you can take a separate registration. If there is a separate registration, then they will be treated as distinct persons. So whatever transfer I make from Chennai to Coimbatore, so that will be treated as stock transfer and treated as supply under GST. Barter and exchange we learn together. So what is barter? What is exchange? So both may seem similar, but there is a slight difference. In barter, there is no concept of money involved, whereas in exchange, there is a money involvement. So what happens is, in exchange, say I go to Purvika, I exchange my old phone, get a new phone. Say new phone is worth 25,000. My old phone goes for 5,000. The remaining 20,000 I pay and get the new phone. So there is an exchange. There is also some money component involved. Whereas in barter, there is no money component involved. It is only exchange of goods for goods or exchange of goods for services, or services for goods or services for services. So this is what is barter and exchange. License. So license for any software like GST software or Tally software, SAP software. So where there is a consideration made and it is made by a person in the course of furtherance of business, that will be treated as supply. Rental, say renting of immobile property, renting of any premises. So all this will be considered as supply. Leasing is say renting is for a short period. Leasing means it's for a long period. Say leasing of any project or software. So all this will come under supply. Disposal. So disposal means something which we have used for a longer period and we are disposing it off as scrap. That will be treated as supply. So all these sale, transfer, barter, exchange, license, rental, lease, disposal, all these will be considered as supply only if it is made for a consideration. So that means there should be an element of consideration and it should be made by a person and it should be in the course or furtherance of business. Only then it will be treated as supply. So this is section 7, subsection 1, clause A. 7, subsection 1, clause B. Import of services. Import of services for a consideration, whether or not in the course or furtherance of business. So this import of service we learn together with para 4 of schedule 1 because both are talking about import of service. The section 7, subsection 1, clause B, read with para 4 of schedule 1. Import of service. So first of all, we have to understand what is import of service. Import of service, the place of supply is, say the location of the supplier is outside India. Recipient, location of the recipient is in India. Place of supply is in India, then it is import of service. So whether it is for a consideration, we have to check. First question itself, we have to check whether it is for a consideration. If the answer to the first question is yes, then yes, it is treated as supply. We need not go to the other questions. If it is no, then whether it is from related person or from any of its establishment outside India. So, say for example, Mr. A and Mr. B are brothers. Mr. B, he has an office in India and Mr. A is from US, a lawyer. So for his business, he has some issues with the income tax, so he wants a lawyer to fight for his case. So he's engaging his brother, Mr. A. So the service is from related person. So if this answer is yes, then we have to check whether it is in the course of furtherance of business. So in this case, B is engaging his brother for his business. So if Mr. A is charging some consideration, then the first question itself, it is out. Yes, it is treated as supply. See, he's not charging consideration. Coming to the second question, whether it is from related person, it is yes. Whether it is in the course or furtherance of business, it is yes. So it will be treated as supply. So when answer to the first question is no, we have to go to the next two questions, and only when the next two questions are yes, it will be treated as supply. Now, same example, if there is, if it is for the personal purpose and no consideration is charged, then it will not be treated as supply because the first question is no, answer to the second question is yes, related yes, but answer to the third question is no. So it will not be treated as supply. Say personal purpose, but consideration is charged, then the first question itself is satisfied. So it will be treated as supply. So this is what is with relation to import of services, section 7, subsection 1, clause B, and para 4 of schedule 1. So this is with related to import of service. Now coming back to the bird's eye view chart, section 7, subsection 1, clause C. Activities specified in schedule 1 made or agreed to be made without a consideration. So what is schedule 1? It's to be treated as supply, even if made without a consideration. So we saw in section 7, subsection 1, clause A, supply includes all forms of supply of goods or services such as sale, transfer, barter, exchange, license, lease, rental, disposal made or agreed to be made for a consideration by a person in the course of furtherance of business. So we saw there should be an element of consideration. But this is the only place, schedule 1 is the only place where the transaction or an activity will be treated as a supply, even if there is no consideration. So there are 4 paragraphs. So first para, permanent transfer or disposal of business asset. So permanent transfer or disposal of business asset. Say a business asset, a laptop. So let us get into the provisions, then I'll explain with an example. Whether ITC has been availed on the said assets, yes, then it will be treated as supply. If it is no, not treated as supply. So permanent transfer or disposal of business asset. What does that mean? So say for example, an employee is working in an organization for a longer period. Say she is using the laptop, the company, they have transferred that laptop to her when she left without a consideration. Say the laptop was 40,000 when they purchased it. Say tax is 12%. So it comes to 4,800. So that 4,800, so 44,800. So 4,800, when that amount was availed as ITC when they purchased it, when the company had purchased it, if the company had availed the ITC, then this particular transaction where the laptop is given free of cost to the employee will be treated as supply, because whatever amount you paid as tax, you have taken back in the form of ITC. So that means government has not received any revenue with regard to that particular asset. So now it will be treated as supply. So we have to go to the valuation rules to find out what will be the value of laptop at this point of time and pay the GST on it. If ITC has not been availed, then it will not be treated as supply because already the particular goods has been taxed and you have not availed ITC. So already the government has received revenue on this particular asset. So if you tax it again, then it will amount to double taxation, and therefore this will not be treated as supply. Next, para 2, supply of goods or services or both between related person or between distinct persons. So when you're going to supply goods or services between related person or between distinct persons, we have to check whether made in the course or furtherance of business. So related persons definition, so many are there. So let us see the related person definition. Such persons are officers or directors of one another's business. So each other's business, section 15, subsection 5 explanation talks about related person. Say A Limited, B Limited. Mr. A is the director of B Limited. Say both are related persons. Such persons are legally recognized partners in business. Say AB associates, Mr. A and Mr. B are partners in that business. Say they both will be treated as related persons. Such persons are employer and employee. So both employer and employee will be treated as related person. Any person directly or indirectly owns or controls or holds more than or greater than or equal to 25% of the outstanding voting stock of shares or both of them. So when they hold this percentage, they'll be treated as related persons. One of them directly or indirectly controls the other. So more than 51% of the shares you're holding or you're participating in the decision making of the company, then you both are related. Both of them are directly or indirectly controlled by a third person. Say A, B, C. The C Limited works in A and B. So it is controlled by a third person. So A and B are related. They directly or indirectly control a third person. So A Limited holds in C Limited, B Limited holds in C Limited. Then A and B are related. They are members of same family. So family definition, we have to understand that. So family, unlike our income tax, like related person, it's not huge. It's very limited. So spouse and children, then dependent parents and grandparents and siblings. So that means spouse, your children, son, daughter, then your mother, father, grandmother, grandfather, then your brother, sister. So only this will come under definition of family. So if you're members of the same family, then you're related person, sole agent or sole distributor or sole concessionaire. So if you are a beneficiary of something, agent and principal, then they both are related persons. So these are the persons who will be considered as related persons or distinct persons. The supply of goods and services are both between related persons or between distinct persons. So related persons, just now we saw the definition. Distinct persons, we know that if they have a registration in one particular state and they also have a registration in another state, then coming under the same PAN, they both are distinct persons. Or if you have two or more registration within the same state for the same PAN, then it will be treated as distinct persons. So whenever there is supply of goods or services or both between related person or distinct persons, whether made in the course of furtherance of business, is the check we have to make. If it is no, then it is not in the treated as supply. If it is yes, then we have to check whether it is a gift from an employer to employee to amount is not exceeding 50,000 in a financial year, then it will be treated as supply. If it is yes, and it is coming at other than this gift, it will be treated as supply. The first case, sorry, if it is not exceeding 50,000, it will not be treated as supply. If it is exceeding 50,000, yes, it will be treated as supply. Any cases other than this will also be treated as supply if it is in the course of furtherance of business. So gift not exceeding 50,000. Say A Limited, it has some 10 employees, they are taking them for a trip. So together they spend only 45,000 for the trip. For all the employees put together, they go for a one-day trip. So then it is not exceeding 50,000, it will not be chargeable to GST. But say they're going for a long trip, 3 days, 4 days, they are spending 1 lakh. Then the entire amount will be chargeable to GST. Para 3, supply of goods by principal to his agent, where the agent undertakes to supply such goods on behalf of the principal. So generally what happens is principal supplies the goods to the agent, and he does not supply, he sends the goods to the agent so that the agent can sell on behalf of the principal. So principal will have so many agents in different places. So what the agent will do, they will sell the goods on behalf of the principal and they will get their commission. But the goods which are moving from principal to agent, there is no consideration. But still, whether it will be treated as supply or not is a question. Since this is coming under Schedule 1 and there is a circular for this, so circular, what it says is, in case the principal and agent transaction in this, if the agent is going to supply in his own name, in the invoice he is going to mention the name of the agent in the invoice, then it will be treated as a supply. If he is going to mention the name of the principal, then it will not be treated as supply, because What happens is if if the agent is going to supply on his own name, then he gains the publicity and all this. So this will be treated as supply and GST has to be paid. An agent can take the input tax credit. Next transaction is by an agent to his principal, where the agent undertakes to receive such goods on behalf of the principal. So agent to his principal. So what does this mean? So in this case, agent to principal means the agent may receive the goods on behalf of the principal, some raw materials or whatever it is. That will be treated as forming part of the supply, even if there is no consideration. Next is para 4 is related to import of services in the course or furtherance of business where there is no consideration. It will be treated as supply. This has been already discussed with section 7, subsection 1, clause B. Next, we are moving on to section 7, subsection 1, clause C. So 7, subsection 1, clause C is completed. 7, subsection 1, capital A. Activities or transactions referred to in schedule 2 to be treated as supply of goods or supply of services. So we all know that it is going to be one nation, one tax for GST. What is the need for classifying it as goods and classifying it as service? So it's because of the rate. We have to check. For goods it is different, services it is different. Services is classified based on the HSN code, that is harmonized system of nomenclature. So based on the HSN code, goods will be classified and services will be classified based on SAC code, that is service accounting code. So based on that, it will be classified. So we need to have a first clarity on whether it is goods or whether it is service. Only then we can classify it and find out the rate. So first activity in section 7.1 capital A is transfer. So any transfer of title in goods, that is nothing but sale, is supply of goods. So when you are going to sell a property, that is anything for that matter, then it is supply of goods. So I sell a laptop and I receive the consideration. So that is sale. It is supply of goods. Any transfer or right to use, any transfer of right in goods or undivided share in goods without the transfer of title, it's nothing but leasing. So leasing is supply of service. So right in goods, transfer of right in goods. So I only get the right to use the goods, but I will not get the ownership or the title. In that case, say for example, I'm going to Coimbatore. Say for 1 month, I'm going to take class there. So I need a projector. So I'm taking it on lease. So in that case, I have the right to use that projector, but I don't have the title. So that is service, supply of service. Undivided share. So undivided means you cannot even divide it with each other. Say for example, you're going to take a co-working space. So many co-working space nowadays, it is becoming very popular. People like startups who cannot afford in the initial stage, they go for this co-working space where everything is readily available. You have to just pay the rent based on the number of seaters you want, like 1-seater, 3-seater, 7-seater, all this. So you are paying the rent and you're getting all the facilities. So everything, it will be ready to occupy office. And like you, many people may be there. So in that case, you have a common printer, common coffee vending machine. So anytime you can go and use, anytime you can take the coffee and all this. So this is an undivided share. You cannot say 10 to 11 is mine, 11 to 12 is yours. No, it cannot be divided. So this is an undivided share, supply of service. Leasing. Under this, we have an exemption. Services of leasing of assets, rolling stock assets, including wagons, coaches, locos, by the Indian Railways Finance Corporation to Indian Railways. So if the Indian Railways Finance Corporation is going to provide the service by way of leasing of assets to the Indian Railways, it is exempted from GST. Others, supply of services. So other than this, everything is taxable under GST. Any transfer of title in goods under an agreement which stipulates that property and goods shall pass on a future date upon payment of full consideration as agreed, hire purchase. So that means in case of hire purchase, we will not get the ownership immediately. It will be get transferred, but only on the payment of last installment. So this is the difference between installment system and hire purchase, where we pay under installment in both the cases, but in installment system, we get the ownership after payment of first installment itself. But whereas in hire purchase, we get the ownership only on the payment of last installment. The title will be transferred. So this is called as hire purchase and it is supply of goods. Next is land and building. Any lease, tenancy, easement, license to occupy land. So renting or leasing of agro machinery or vacant land with or without a structure incidental to its use. So renting of this agricultural machinery or vacant land, this will be treated as exempt supply. One-time upfront amount called as premium, salami, cost, price, development charges, or by any other name, leviable in respect of the service by way of granting long-term, 30 years or more, lease of industrial plots or plots for development of infrastructure for financial business, provided by the state government, industrial development corporation, or undertakings, or by any other entity having 50% or more ownership of central government, state government, union territory to industrial units or developers in any industrial or financial business area. So if it is going to be an upfront amount which I'm going to receive as premium, then and I'm leasing it as industrial plots. Whatever I'm leasing is for industrial plots and it is going to be long term. Long term means it is 30 years or more. And this has to be done by state government, industrial development corporation or undertakings or by any entity having more than 50% or more ownership in the of the central government, state government, union territory, and it should be leased to industrial units or developers in any industrial or financial business area, then it is exempt from GST. Any other service in relation to lease, tenancy, easement, or license to occupy land is taxable under GST. Any lease or letting out of the building, including a commercial, industrial, or residential complex for business or commerce, either wholly or partly, is supply of services. So the lease or letting out of the building. So whenever you're going to lease or let out a building, it can be a commercial, industrial, or any residential complex, either for business or commerce. And that will be treated as supply of service. Treatment or process, job work. Any treatment or process which is applied to another person's goods, that is supply of service. So treatment or process means something which you're doing on other person's goods. Say raw material is sent to big manufacturers, they don't do all the process by themselves. They'll send it to the job worker. So raw materials are sent to the job worker and job worker does the process or treatment of that and he sends it back. So this is supply of service. Transfer of business assets, where goods forming part of the assets of a business are transferred or disposed of by or under the directions of the person carrying on the business so as no longer to form part of this assets. Such transfer or disposal is supply of goods by the person. So where goods forming part of the assets of the business are transferred or disposed of under the directions of the person carrying on the business, no longer they form part of the business. So what does this mean? So any assets of the business you are transferring or you are disposing it on. Say for example, an air conditioner, we are disposing it. So that will be treated as supply of service. Where by under the directions of the person carrying on the business, goods held or used for the purpose of the business are put to any private use or used or made available to any person for use for any purpose other than the purpose of the business, then the usage or making available of such goods is a supply of service. So if say for example a managing director or any director for that matter, a car is provided by the company, but that is for official purpose, home to office or any other official places you can, but you will also be using it for personal purpose. So when it is put to private use or any use other than the purpose of business, then that will be treated as supply of service. Para 4C, where any person ceases to be a taxable person. So no more he is a taxable person. Then any goods forming part of the assets of the business carried on by him shall be deemed to be supplied by him in the course or furtherance of his business immediately before he ceases to be a taxable person. So where any person ceases to be a taxable person, so no more he's a taxable person. So he's winding up his business. So before winding up his business, whatever assets are there, stock which he has in his business, that shall be deemed to be supplied by him in the course or furtherance of business immediately before he ceases to be a taxable person. So it will be a deemed supply. So he has not supplied it, but it will be treated as a deemed supply just because he is winding up, and after winding up, he may not pay the taxes. So government is losing that revenue. So before that itself, before winding up itself, whatever goods you have in your assets stock, that will be treated as deemed supply, and you have to pay tax on it for winding up. So immediately before he ceases to be a taxable person, unless, so there is an exception. The business is transferred as a going concern to another person. So as it is transferred. Same business is carried on by the other person. Second case, business is carried on by a personal representative who is deemed to be a taxable person. So father's business, son is taking care. So then in that case, it will not be treated as deemed supply in these two cases. So one is business transferred as a going concern, the other one is business is carried on by a personal representative. So in those cases, it will not be treated as deemed supply. Next is renting of immovable property. So renting of immovable property, what are all the exemptions? Renting of residential dwelling for use as residence. So in the public interest, this is exempt. And again, renting of residential dwelling for use as residence, if it is provided to a registered person, it has become taxable under reverse charge. So when we discuss reverse charge, we'll see in detail. Next, renting of precincts of a religious place meant for general public, owned or managed by him, managed by an entity registered as a charitable or religious trust under Section 12AA of the Income Tax Act 1961, or a trust or an institution registered under Section 23 CB of the Income Tax Act 1961, or a body or any authority covered under Section 10 2 Clause BBA of the State Income Tax Act. So, renting of residential dwelling, that is exempt. Renting of precincts of a religious place, which is meant for general public, and it has to be owned by this entity or charitable or a religious trust under Section 12A of the Income Tax Act, or a trust which is registered under Section 1023 CB of the Income Tax Act, or a body or an authority which is covered under Section 1023 BB of the Income Tax Act. So exemptions are there, but there is a proviso stating that the exemption shall not apply in case of renting of rooms where the charges are 10,000 or more per day. Sorry, 1,000 or more per day. So if the charges are 1,000 or more per day, then there is no exemption. The above exemption will not apply. Renting of premises, community halls, Kalyana Mandabam, or any open area where the charges are 10,000 or more per day. So in this case, if the charges are 10,000 or more, then there will not be any exemption. Renting of shops or other places of business or commerce where charges are 10,000 or more per month. So in the temple or in any place, we'll have some shops. So for that, per month charges are more than 10,000 or 10,000, then the exemption will not apply. Otherwise, the exemption will apply if the value is less than this. Next is taxable services, accommodation in hotel or guest house. Earlier we had this up to 1,000 rupees, it is exempt, but now it is done away with. So right from rupee 1, it is fully chargeable to GST. And any other cases, yes, it is chargeable to GST. Construction service. Construction service, whether consideration has been received after issuance of completion certificate or after its first occupation earlier. So we have to check whether the consideration has been received after the issuance of completion certificate or first occupation. Once a building is constructed, a completion certificate will be given by the chartered engineer that it is completed, or anyone who comes and occupies for the first time. So before the, if the consideration has been received, so during the construction stage itself, say consideration is received, then it will be treated as construction service and treated as supply of service. If it is not received during the construction stage, only after the property is completed, it is sale of building. It is covered under Schedule 3, treated as Either supply of goods or supply of services. So consideration is received before the issuance of completion certificate means, yes, it is treated as supply of service. So in that there are certain exemptions. Services provided by way of pure labor contracts of construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation or alteration of a civil structure or any other original works pertaining to the beneficiary-led individual house construction or enhancement under the Housing for All Urban Mission or Pradhan Mantri Awas Yojana. So when any labor contract, so they are not mentioning works contract, they are mentioning only labor contracts where construction, erection, commissioning, installation, all these happens for a individual house construction, beneficiary-led individual house construction or enhancement under the Housing for Urban Mission or Pradhan Mantri Awas Yojana. In this case, then it is exempt. Next is services by way of pure labor contracts of construction, erection, commissioning or installation of original works pertaining to a single residential unit otherwise than by way of a residential complex. So if it is pertaining to a single residential unit, so labor contracts for an construction, erection, commissioning or original works pertaining to a single residential unit otherwise than as a part of residential complex, then it is exempt from GST. Apart from these, all these are taxable. Next, temporary transfer or permitting use or enjoyment of any intellectual property rights. So anything which for that matter, copyright, say for example, an author is transferring his copyright to the publisher for publishing his book. So there is a transfer of copyright. So temporary transfer or permitting use or enjoyment of intellectual property rights that will be treated as supply of service. Development, design, programming, customization, adaptation, upgradation, enhancement, implementation of information technology software. So when an information technology software is developed, designed, programmed, customized according to the organization's need, and it is upgraded from one level to another level. So implementation, all these will come under supply of service. Agreeing to the obligation to refrain from an act or to tolerate an act or a situation or to do an act. So you are refraining to do an activity, not doing something, or tolerating an activity or a situation or doing an activity, everything will be treated as supply of service. So not doing something is supply of service. Tolerance, say tolerating an activity in front of supermarket, there is a hawker or any person who's supplying some flower vendor or a chat shop, juice shop. So what they'll pay rent to the supermarket, but still the supermarket is tolerating that because many persons may come to that place and it will affect. So in this case, tolerating an activity will be treated as supply of service. There is an exemption for this. Services provided by the central government, state government, union territory or local authority by way of tolerating non-performance of a contract. There is no performance. Non-performance of a contract for which consideration is in the form of fine or liquidated damages. So there is fine or liquidated damages or non-performance is payable to the central government, union territory or local authority under such contract. So in this case, whenever there is non-performance and government is charging the fine or liquidated damages by way of tolerating that non-performance, that liquidated damages which is paid, that and all will be treated as supply of, will not be treated as supply of service because it is exempt. Next, transfer of right to use goods for the purpose, for any purpose, without whether or not for a specified period, for cash deferred payment or valuable consideration is supply of service. Next is composite supply. So both are treated as supply of service. Works contract. So what is works contract? Works contract is a joint contract consisting of both goods as well as service. So that is what is works contract. Now, works contract we have both goods as well as service. Earlier in service tax, certain portion was treated as service, certain portion was treated as goods, so VAT was charged. But whereas in GST, it is completely treated as supply of services. Therefore, it is supply of service. Next is supply of by way of any part of any service or in any other manner whatsoever of goods, being food or any other article for human consumption or any other drink other than the alcoholic liquor for human consumption, or whether such supply or service is for cash, deferred payment, or any other valuable consideration. So that means if it is going to be supply of food, whenever you go to a hotel or restaurant, you not only enjoy the food but also the ambience. Some restaurants will have kids play area, a television where it is playing a cricket or movie, music, all this will be there. So we are enjoying those ambience. So there is both goods as well as service. In service tax, part of them were treated as goods, VAT was charged, and partly it was service and service tax was charged. In GST, it is completely treated as supply of services. Works contract. What is works contract? Contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commissioning of any immovable property. So it is only with relation to immovable property. It consists of both goods as well as service. But if it is only with relation to immovable property, we can consider it as works contract, wherein transfer of property in goods, whether as goods or in some other form, is involved in the execution of such contract. So this is what is works contract. Main important thing is it's only in relation to immovable property. Section 7, subsection 2, clause A. Schedule 3. Activities or transactions which shall be treated neither as supply of goods nor supply of service. So neither supply of goods nor supply of service. Services by an employee to employer in the course of or in relation to the employment. So whatever service employee provides to the employer in the course of employment is neither supply of goods nor supply of service. So whatever salary the employee receives, so that will not be subject to GST. Suppose if you are not on payroll, you are getting it under contract, 184C TDS is deducted, then it will be supply of service because they are mentioning only employee to employer. Only when you are on roll, that one will be considered as neither supply of goods nor supply services. But otherwise, if you are going to receive consultancy fee, retention fee, or professional fee, where TDS is deducted under 194J, then it will be very much treated as supply of service. Second case, services by any court or tribunal covered under any other law for the time being in force. So whatever services the tribunal, the court provides, so that will be treated as supply of, that is neither supply of service nor supply of goods. Next, functions performed by members of panchayat, members of state legislature, members of panchayat, parliament, members of municipalities, and members of other localities. Duties performed by any person who holds any post in pursuance of provisions of the constitution in that capacity, or the duties performed by any person as a chairperson or member of a director in any body established by the central government or state government or local authority, and who is not deemed as an employee before the commencement of this clause. So what they are trying to tell is, if any service is provided by MP/MLA in their capacity as an MP/MLA, then it is neither supply of goods nor supply of services. But in some other capacity, if it is provided, if an MP or an MLA say is a chartered accountant, means as a chartered accountant, if he is going to provide service, that will be very much taxable. Only if they are providing in their capacity as an MP or MLA, that alone will be neither treated as supply of goods nor supply of service. Services of funeral, burial, crematorium, or mortuary, including transportation of the deceased. So when there is funeral, burial, crematorium, mortuary, so for all this there is no GST. and it also includes transporting the dead body. So transportation of the deceased. Deceased means a dead body. So that also is neither supply of goods nor supply of service. Sale of land is subject to para 5B of Schedule 2, sale of building. The sale of land is always neither supply of goods nor supply of services. But sale of building, we have to check whether the consideration is received during the construction stage. If it is yes, supply of service. If it is no, it is sale of building, neither supply of goods nor supply of service. Actionable claims other than lottery, betting, and gambling. So here I would like to share there is an amendment. So a recent amendment, let me share that screen. Yes. Hope it is visible. So GST amendment, supply under GST. So amendment in entry 6 of Schedule 3. So before amendment, it was actionable claims other than lottery, betting, and gambling. So only these three were chargeable to GST. Other than this, it was neither supply of goods nor supply of services. So now what they have mentioned, actionable claims other than specified actionable claims. So what is specified actionable claim? So there is a definition, section 2, clause 102A inserted. Specified actionable claim means the actionable claim involved in or by way of betting, casinos, gambling, horse racing, lottery, or online money gaming. So there is a specified actionable game. So what is online gaming? That is defined under section 2, clause 80A. Online gaming means offering of a game on the internet or an electronic network and includes online money gaming. So we have this rummy circle, all this we play. So that will be treated as supply of goods. So this will not be actionable. I mean, this will not be a neither supply. It will not come under Schedule 3 because it is other than specified actionable claims and it is very much included with actionable claims. So already betting, gambling, and lottery were there. So what are all the other things included is casinos, horse racing, and online money gaming. So what is online money gaming? Online money gaming is defined under section 2, clause 80B. Online money gaming means online gaming in which players play or deposit money or money's worth, including virtual decision or digital assets in the expectation of winning money or money's worth, including virtual decision digital assets in any event, including games, completion or any other activity or process. Same is permissible or otherwise under any other law for the time being in force. So online money gaming means where the players pay or deposit some money or including this virtual assets and they win from that game. So this will be your actionable claim and it is very much included in the ambit of GST. So supplier, section 2, clause 105, a proviso inserted, a person who organizes or arranges directly or indirectly supply of specified actionable claims, including a person who owns, operates, or manages digital or electronic platform for such supply, shall be deemed to be a supplier of the actionable claims, where such actionable claim are supplied by him or through him, and whether consideration in money or money's worth, including assets for supply of such actionable claims is paid or conveyed to him or through him or placed at the disposal in any matter, and as all the provisions of the act and shall apply to such supplier of specified actionable claims as if he is the supplier of the goods to pay the tax in relation to the supply of such actionable claims. So this is the definition of supplier which is inserted, and virtual digital assets will have the same meaning which is assigned under Income Tax Act. So this is what is with regard to entry number 6. So there is an amendment. So in my material, so actually the functions performed by members of parliament, that should be 3. So there it is missing. That's why here it is showing as 5. So this entry is 6 actually. Next, 7th one. Supply of goods from a place in a non-taxable territory or to another place in the non-taxable territory without goods entering into India. So what happens? US, UK, I have clients. Mr. A, Mr. B, and C is in India, importer. Now what happens is they are having a contract. Mr. C is having a contract with Mr. B to supply certain goods. So from India to UK, he has to send the goods. So for that, he is getting some goods from US. So what happens is he is instructing the US person to directly send the goods to the UK person, where the goods are not entering into India. So it is from one place in the non-taxable territory to another place in the non-taxable territory. Therefore, it will not be treated as supply of goods nor supply of service. Supply of warehouse goods to any person before clearance for home consumption. So before even it is cleared for home consumption, if it is supplied, then it is neither supply of goods or supply of service. Supply of goods by the consignee to any other person, by any other person, by endorsement of title, document of title in the good to the goods, after the goods have been dispatched from the port of origin, located outside India, but before clearance for consumption. So we have to give the clearance for home consumption in India before even it is coming, means like then it is neither supply of goods nor supply of services. So through document of title to goods it has come, and it is neither supply of goods nor supply of services. So court includes district court, high court, and Supreme Court. Warehouse goods as per the Customs Act. It is goods which is deposited in the warehouse. Next, section 7, subsection 2, clause B. Such activities or transactions undertaken by the central government, a state government, or any local authority in which they are engaged as public authorities, which may be notified by the government on the recommendation of the council. So all these activities, transactions which are undertaken by the central government, state government, or local authority, where they are engaged as public authorities. So in this case, it is neither supply of goods nor supply of service. Services by way of municipal, panchayat, or municipality. Services by way of any activity in relation to function interested to a panchayat and Article 243G of the Constitution, or to municipality in under Section 243W of the Constitution. So in this case, that will be neither treated as supply of goods nor supply of service. Next, services by way of grant of alcoholic liquor license against consideration in the form of license fee or application fee, or by whatever name it is called. So grant of alcoholic liquor license. So only for the, because alcohol itself is away from GST. So it's neither, it's like it will not be in the ambit of GST, but the state is charging the VAT still. So therefore, alcohol itself is away from GST. So therefore, the grant of alcoholic liquor license, that is also not treated as supply of, neither treated as supply of goods nor supply of service. So there is a circular which is saying that whatever services provided by the government to business entity held by way of privileges, licenses, mining rights, natural resources such as spectrum, etc., against payment of consideration in the form of fee, royalty, etc., are taxable under GST. So anything apart from this alcoholic liquor license, any other license is fully taxable. So central government decided to, in the 37th meeting on 29/2018, to clarify that this is applicable only to the grant of alcoholic liquor license by the central governments as an agreement between the center and the states and has no applicability or precedence value in addition to grant of the other licenses and privileges for a fee in other situations where GST is payable. So in this case, what happens is this alcoholic liquor license, when it is provided by the government, then it is neither supply of goods nor supply of service, but any other license will be chargeable to GST. So this is the summary of the chapter supply. So supply, first thing we have to check whether it is an activity including supply of the services such as sale, transfer, barter, exchange. If it is yes, treated as supply. For a consideration is we have to check. Then is the activity, is it in the course or furtherance of business? Yes. If it is it an activity specified under Schedule 3? No. Then it is supply. Suppose there is a consideration, but it is the activity is specified under Schedule 1? No. If it is yes, whether it is for a consideration? No. But the activity is specified under Schedule 1. If it is yes, then we have to check whether it is in the course or furtherance of business. If it is yes, then it is treated as supply. If it is no, it will not be treated as supply. Then import of service. So if it is in the course or furtherance of business, whether it is import of service, we have to check. If it is yes, it treated as supply. If it is not an import of service, then it is not a supply. So what has to be present is all these elements. It should either be supply of goods or supply of services, and it should be for a consideration by a person in the course of furtherance of business. Then all these will be treated as supply. So this is what is with regard to the chapter supply, and there are certain circulars which has been included. So circular number 201, CGST dated 1st August 2023. Whether supply of food or beverages in cinema hall is taxable as restaurant service. So basically, what is restaurant service? So restaurant service means supply by way of or part of any service, can be food or any other article for human consumption or any drink provided by a restaurant, eating joint or restaurant, which includes mess, canteen, whether for consumption or for takeaway service away from premises, where such food or article for human consumption or drink is supplied. So in this case, supply of food or beverages in a cinema hall. So we have to check whether whatever goods, food or beverages is supplied in a cinema hall is taxable as restaurant service. So the food or beverages which is supplied by way of or part of service and supplied independent of the cinema exhibition service, then it will be as taxable, that is restaurant service. So supply of food or beverages in a cinema hall is taxable as restaurant service. So far it is food or beverages supplied by way of or part of service, and they are supplied independent of the cinema exhibition service. Where the sale of cinema ticket and supply of food and beverages are clubbed together, then it is a bundle supply. So it satisfies the test of composite supply. Therefore, the entire supply will attract GST at the rate applicable to the service of customs. Sorry, service of exhibition of cinema, the principal supply. So whatever is for cinema tickets, whatever tax is there, the same tax will be applicable for the food and beverages if it is going to be clubbed together. So this is what is circular 201. Circular 196, whether holding of shares in a subsidiary company by the holding company will be treated as supply of service under GST and will it be taxed accordingly, whether the transaction is a supply or not. So securities are neither supply of goods nor supply of services, which we already know. And further securities include shares. They include shares as per section 2 clause H of the Securities Contract Regulation Act. So activities of holding shares or securities of a subsidiary company by the holding company, per se, they cannot be treated as supply of services by holding company to the subsidiary company and cannot be taxed under GST. So this is what is with regard to holding of shares in a subsidiary company. Next is charge of GST. Section 5 subsection 1 of IGST Act has been amended. Integrated tax on goods other than the goods which is notified by the government on the recommendation of the council imported into India shall be levied and collected in accordance with the provisions of section 3 of the Customs Tariff Act on the value as determined under said act at the point where the duties of customs are levied on the said goods under section 12 of the Customs Act. So IGST on any goods other than the goods which are notified by the government on the recommendation of the council, which is imported into India. So there is an amendment which states that other than the goods as may be notified by the government. So what does that imply? So notification 3/2023 IGST dated 29 September with effect from 1st October 2023. Effect from 1st October 2023. Supply of online money gaming. Online money gaming has been notified for the purpose. And this implies that import of specified actionable claim of online money gaming will be taxed under IGST as import of goods without applicability of customs duty. With services which are supplied by a director of a company in his personal capacity, such as renting of immovable property to the company or body corporate, are subject to reverse charge mechanism. So next is with regard to reverse charge. So whatever service supplied by the director of a company or a body corporate to a company in his private or personal capacity are not taxable under RCM. So this is nothing but personal capacity. So they are not chargeable to tax under RCM. Only those services supplied by director of companies or body corporate which are supplied by him in the capacity of a director of the company. So if it is supplied by him in the capacity of a director of the company or a body corporate, then it shall be taxable under reverse charge. So if it is provided in the capacity of the director only, it is reverse charge. Personal capacity, it is not chargeable to tax. It is not chargeable to tax under reverse charge. So with this, we have completed what is supply. Let us move on to the next one, reverse charge mechanism. So RCM for goods has been included under this in this examination. So earlier RCM for goods were not included. So let me share that screen. So earlier RCM for goods were not included in the syllabus. Now RCM for goods has been included. So there are only some 8 goods which are included in this. Cashew nuts not shelled and peeled. When it is supplied by agriculturist to a registered person, then the registered person will have to pay tax under reverse charge. BD wrapper or tender leaves. Agriculturist to any registered person, the registered person will have to pay tax under reverse charge. Tobacco leaves. So tobacco leaves is supplied by agriculturist and the registered person will have to pay tax under reverse charge. Silk yarn. Manufacture of silk yarn from raw silk. Silkworm. Of a supply of silk yarn to a registered person, then the registered person will have to pay tax under reverse charge. Raw cotton. So raw cotton, if it is supplied by agriculturist to any other registered person, then the registered person will have to pay tax under reverse charge. Supply of lottery. So lottery, if it is going to be supplied by state government, union territory or a local authority, then the lottery distributor or selling agent will have to pay tax under reverse charge. Next is used vehicles. Seized and confiscated goods, old and used goods, waste or scrap. So if it is going to be provided by central government, state government or union territory or a local authority to any registered person, then that registered person will have to pay tax under reverse charge. Priority sector lending certificate. So priority sector lending certificate, if it's provided by any registered person to another registered person, then that registered person will have to pay, the recipient will have to pay tax under reverse charge. So these are all the goods. Apart from that, one more is added, some essential oils. So these are the goods which are covered under reverse charge mechanism. Let us see the reverse charge mechanism for services. Yes. Let me share the screen. So reverse charge mechanism, basically what is reverse charge? The recipient will be liable to pay the taxes. So what is the background behind reverse charge? So this was there in service tax as well. So what happened was, there were certain persons who were evading taxes. Say, let us take one of the notified service is the insurance agent service. So insurance agent may be educated, may not be educated. So may have tax knowledge, may not have tax knowledge. So what happened was, insurance agent is a supplier of service, recipient is company. So agent has to pay tax, but he was evading taxes because he is not having any knowledge about it. So government was losing the revenue. In order to mitigate this hardship, they brought this concept called reverse charge mechanism. So this is continued in GST for both goods as services, but so many services are included in GST. So it started with only 11 services and today we have 22 services. So let us see one by one in detail. Goods Transport Agency service. So Goods Transport Agency. So A Limited Consignor Delhi agree to pay freight is liable to pay GST. So what happens? GTA is providing the service to A Limited. A Limited has to transfer the goods to B Limited consignor. So for that he is engaging a GTA. So A Limited is the consignor and they agree to pay the freight. So they will have to pay tax under reverse charge mechanism. So in this case, whether GST is to be payable under reverse charge, whether in all cases, no. If it is going to be 12%, then you are not liable to pay tax under reverse charge. Whether all the recipients are liable to pay tax under reverse charge, no. Only the following recipients like factory, society, cooperative society, persons registered under GST, body corporate, partnership firm, whether they are registered or not, and registered casual taxable person. So who is a registered casual taxable person? So that is what we have to understand. Who is a registered casual taxable person? So registered casual taxable person. So for that, we have to understand what is casual taxable person. So who is a casual taxable person? One who comes from a different state and does business in a state where he does not have a fixed place of business. So say for example, a person comes from Delhi to do an exhibition in Chennai. So he or she will not have a fixed place of business in Tamil Nadu. So he will have a fixed place of business in Delhi and he may be registered in Delhi. But still for the purpose of this, for the state of Tamil Nadu, she will become an unregistered person. So casual taxable person will have to register at least 5 days prior to the commencement of the business. They will have to register. And they will also have to make advance deposit of tax. So they have to estimate what will be their tax liability based on the turnover and pay it in advance. Only then they will get the acknowledgement. And why it is this casual taxable person will have to register compulsorily. So irrespective of the threshold, they will have to register compulsorily. But then why it is mentioned registered casual taxable person? Because anyway, they have to take registration compulsorily. They can simply mention it as casual taxable person. Why it is mentioned as registered casual taxable person? It's because earlier it was mentioned only as casual taxable person. But there was an amendment stating that if a casual taxable person is dealing with handicraft goods, then he shall register only when he crosses the threshold limit of 40 lakhs. Until that, he need not register. So therefore, so if you are providing this registered casual taxable person, if it is casual taxable, whether all services are taxable under RCM? No, there are certain exemptions. So goods transport agency, rail or vessel, I have given it here itself because most of them are same. So goods transport agencies, relief materials meant for victims of natural or man-made disasters, calamities, accident or mishap. So any relief material which is sent, so due to tsunami or earthquake or there is flood, then it is exempt. Newspaper or military equipments, so defense or military equipments, it is exempt. Newspaper or magazines which are registered with the registrar of newspapers. So in the public interest, this is exempt. Agricultural produce, when it is transported, it is exempt. Milk, salt, food grain, including flours, pulses, and rice. So all these three cases, it is under exemption. Organic manure, if it is transported through a goods transport agency, it is exempt. Single consignment and multiple consignment. What is single consignment and multiple consignment? Single consignment means a vehicle will carry the consignment of belonging to only one consignee. So in that case, if the value consideration is not exceeding 750 rupees, then it will be treated as exempt. If it is exceeding 750 rupees, say it is 800, then the entire 800 will be chargeable to GST. Multiple consignment. So what is multiple consignment? So in a single vehicle, goods belonging to many consignees are present. So A, B, C, D, all the consignees, vehicle, the vessel will contain all the vehicle will contain all the goods belonging to the multiple consignees. So in that case, if the value is not exceeding, the consideration charge is not exceeding 1,500 rupees, then it will be exempt. If it is exceeding 1,500, say it is 1,600, means the entire 1,600 will be chargeable to GST. So are there any other exemptions? Yes. Services provided by goods transport agency by way of transportation of goods in a goods carriage to a department or establishment by the central government or state government or union territory or local authority or government agencies where they have taken registration only for the purpose of deducting TDS. So these persons are liable to deduct TDS under section 51. There is a concept of GST TDS where these persons are liable to deduct under section 51. And in that case, if they have taken registration only for the purpose of deducting TDS and not for anything else, then this will be exempt when the goods transport agency provides service to these persons. So this is the first service which is covered. Next, services provided by advocates, including senior advocates. So if they are providing to other than business entity, it is exempt. If it is provided to business entity, then we have to check whether the business entity is located in the, is registered, is liable to get registered under 22 subsection 1. If it is no, exempt from GST. If it is yes, taxable under reverse charge mechanism. So what is this 22 subsection 1? It is a threshold limit for registration. So if it is going to be supply of goods, it is 40 lakhs in general. Services in general, it is 20 lakhs. Supplier of service, goods or service, MMNT. So Manipur, Mizoram, Nagaland. So these four. So in this case, it is only 10 lakhs. Supplier of goods or service if they belong to this state. Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana, then it is going to be 20 lakhs in a financial year. So these are the threshold limits. If the business entity is not crossing this threshold limit, then they need not pay tax under reverse charge. Otherwise, they have to pay tax under reverse charge. Are there any other exemptions? Yes. Services supplied by advocates, including if it is going to be supplied by an individual or partnership firm of advocates, other than a senior advocate, to an advocate. So from one advocate to another advocate, from one partnership firm of advocate to another partnership firm providing the legal services, it is exempt. Say advocate providing services to central government, state government, union territory, local authority, government authority, or government entity, it is exempt. Senior advocate. So who's in the council for a long, he's in the practicing as an advocate for a long term, then he'll be determined as a senior advocate. And when they provide service to a central government, state government, union territory, local authority, government authority, or government entity, it is exempt from GST. So if the senior advocate provides service to advocate or partnership firm of advocates, it will not be exempt. Next, services supplied by arbitral tribunal. So any services which is supplied by arbitral tribunal to a business entity located in the taxable territory. So if it is provided to a business entity, then the business entity will have to pay tax under reverse charge. Services supplied by an arbitral tribunal exemptions. If it is provided to any person other than the business entity or central government, state government, union territory, authority, government authority, or government entity, if it is provided to these persons, it is exempt. To business entity, whether the business entity in the preceding financial year was required to register under 22 subsection 1. So we saw the threshold limit 22 subsection 1, 40 lakhs, 20 lakhs, 10 lakhs, and all. So if they're liable to register, then they're taxable under reverse charge. Otherwise, it is exempt. Services provided by way of sponsorship to any body, corporate, and partnership firm or a partnership firm read with Circular 116 bar 35 bar 2019. GST dated 11/10/2019. Sponsorship service. So sponsorship service by individual, by a body corporate. So if it is going to be by an individual, if they are providing to a charitable institutions, you have to understand what is this all about. So if the individual is sponsoring to the charitable organizations, and if the sponsorship is aimed at giving publicity, if it is yes, means treated as supply and it will be chargeable to GST under forward charge. If it is no, means not taken into, not liable to GST. So say for example, you're sponsoring for a temple. Say they just put Mr. A 10,000 rupees. So then there is no publicity. They put Mr. A and associates, chartered accountant, Nungambakam. So that's aimed at giving publicity. So in that case, it will be chargeable to GST. If it is provided by an individual to any other than charitable organization, then liable to GST under forward charge. By a body corporate or partnership firm. So if it is provided by body corporate, so we have to understand only if the sponsorship is by body corporate or partnership firm, then it is liable to GST under reverse charge, whoever is making the sponsor. Say for example, Arun Excel is sponsoring for Vijay TV. So Vijay TV will be the supplier because Arun Excel is getting advertisement services. So in this case, Arun Excel will be the body corporate and the supplier is Vijay TV. So recipient is either partnership firm or body corporate. It satisfies the conditions. So Arun Excel will be liable to pay tax under reverse charge. Next, government services. So government services, here there is a change. So let us go to the amendment. So there is a change. What it is stating? Let me share that screen. Yes. So services supplied by the central government, state government, union territory, or local authority to a business entity, excluding renting of immovable property and services specified below. So what are all the services? Services by the Department of Post. And they have also made an inclusion and the Ministry of Railways. The Department of Post and the Ministry of Railways. Services in relation to aircraft or vessel. Inside or outside the presence of the port or airport. Transportation of goods or passengers. So in this case, all these cases, the supplier of services, central government, state government, union territory, or local authority, a recipient will be any entity which is located in the taxable territory. So what happens is, apart from these services provided to a business entity in the taxable territory, then the business entity will have to pay tax under reverse charge mechanism. Next, if it is in relation to immovable property, renting of immovable property. So services supplied by central government, excluding the Ministry of Railways, online railways, state government authority, by way of renting of immovable property to a person registered under the GST. So In this case, central government, state government, unit entity or local authority is chargeable to GST under reverse charge mechanism. So services supplied by central government in excluding the Ministry of Railways by way of renting of immovable property. Then the person who is registered under the CGST Act, so that person will have to pay tax under reverse charge mechanism. So if it is provided to a registered person, the registered person will have to pay tax under reverse charge. Yes. So this is what is with regard to government service. Director service. Director service to a company or a body corporate located in the taxable territory. If he is going to be a whole-time director, then we have to check whether he is receiving salaries and the TDS is deducted under 192 of the Income Tax Act. Then only he is an employee of the company. And as per Schedule 3, para 1, employer services provided by employee to employer in the course of business, that is in the course of employment, will not be treated as supply of goods or services. So employee of the company, neither supply of goods nor services, Schedule 3 applies. If it is going to be full-time director and he is paid other than salaries, where the TDS is deducted under 194J, professional fees, then it will be a supply where the tax is to be discharged by the company. So he is not an employee outside the ambit of Schedule 3. The GST is payable by the company or a body corporate under reverse charge. If it is provided by an independent director, so independent director anyway, he is not an employee of the company, so it will be outside the ambit of Schedule 3. So therefore, GST is payable by the company or body corporate under reverse charge. Insurance agent service. So what is the work of an insurance agent? To collect the premium from the policyholder and pay to the insurance company. So there are two options. We have to check whether the premium covers only risk or premium covers S plus service. So if it is covering only risk, then just there is no two options. It is only one option: pay GST on the commission 18%. If it is going to cover risk plus savings, there are two options. First option is pay GST on commission. Second option is you pay GST on value of supply is 25% of the premium charged from the policy holder in the first year. And the second was 12.5% of the premium charged from 20 years. So what happens is there are two options. Either you pay GST on the commission, pay to the agent, or we can use the second option where the value of supply will be determined as 25% of the premium for the first year, and for subsequent years onwards, it is 12.5% of the premium. On that, GST will be charged. Recovery agent service. Service is supplied by recovery agent. Then in that case, if it is provided to a banking company or a financial institution or NBFC is located in the taxable territory, then the banking company or financial institution or NBFC will have to pay the taxes. Next, supply of services by the members of overseeing committee to RBI. So RBI has constituted an overseeing committee where there are members. So when the members provide that service, then the RBI will have to pay tax under reverse charge. Services supplied by individual direct selling agents. So services supplied by individual direct selling agents to a banking company or an NBFC located in the taxable territory. So when the direct selling agents are going to provide service to a banking company or NBFC, then we have to check whether it is a body corporate or partnership firm or LLP, or if it is from other than body corporate, partnership firm, or LLP. So only if it is provided by other than body corporate, because they clearly mention individual direct selling agent. So then it is taxable under reverse charge. If it is from body corporate or partnership firm or LLP, then under forward charge. So who is a direct selling agent? A direct selling agent or a DSA is a person who is working as a referral agent to the bank. So he refers some clients to the bank. So this is the work of a direct selling agent. Next, services provided by business facilitator to a banking company, read with circular 86/5/2019 GST. Services provided by business facilitator. So if they're going to provide service to a banking company, it's going to be a rural area, then it is exempt. If it is from urban area, it is taxable under RCM. So business facilitator can use the client's proposal and all this, facilitate the bank to carry out the transactions, but they cannot transact on behalf of the bank. So they cannot receive any money from the customers on behalf of the bank. So bank will pay some commission to the business correspondent or business facilitator. The rate and quantum will be reviewed periodically. The agreement with the business correspondent specifically prohibits them from directly charging any fees to the customer. So they cannot transact on behalf of the bank. On the other hand, the banks are permitted to collect reasonable service charges from the customers for such service in a transparent manner. The arrangements of banks with the business correspondents specify that the transactions are accounted for and reflected in the bank's books by end of the day or the next working day, and all agreements or contracts with the customer shall clearly specify that the bank is responsible to the customer for the acts of omission and commission of the business facilitator or corresponding. So here the bank is only responsible if there is any error or omission from the part of the business facilitator. Services provided by agent of a business correspondent to a business correspondent. So if a business correspondent, agent of a business correspondent is providing to a business correspondent, then services supplied by business facilitator or a business correspondent to a banking company with respect to accounts in a rural area branch. If it is going to be in a rural area branch, it is exempt. Any person as an intermediary to the business facilitator or a business correspondent. So with respect to services mentioned in entry A, or the business facilitator or the business correspondent to an insurance company in a rural area branch. So if it is going to be a rural area branch, it is exempt. Other than this rural area branch, it is fully taxable under reverse charge. So what is the difference between the business correspondent and business facilitator is business correspondent can transact on behalf of the bank, whereas business facilitator cannot transact on behalf of the security services. Security services provided to a registered person in taxable territory by a body corporate, by other than a body corporate. So if it is by a body corporate, then forward charge, no issues at all. If it is by another than body corporate to a registered person, and we have to check whether the recipient is a department or establishment of central government or state government or union territory or local authority or government agencies which has taken registration under the CGST Act 2017 only for the purpose of deducting TDS under section 51 and not for making a taxable supply of goods or services, or a registered person paying tax under section 10 of the CGST Act. So that means if a person, there is a section called section 51 where there is a GST TDS. So in this case, the Department of Central Government, local authority, government agencies, where they are liable to deduct TDS, they have to take compulsory registration. So if they have taken registration only for the purpose of deducting TDS and not for anything else, then this entry will not apply, forward charge only will apply. And if it is going to be a registered person paying tax under section 10, that is composition scheme, then it is taxable under forward charge only. Other than this, it is chargeable to tax under reverse charge. Next, services supplied by any person by way of transfer of development rights or floor space index, including additional floor space index for construction of project by a promoter. So whenever there is a service supplied by any person by way of transfer of development rights or floor space index for construction of a subject by a project by a promoter. So if it is going to be construction of other than residential apartment, then it is fully taxable under reverse charge, no doubt at all. If it is going to be a residential apartment, then we have to check whether the property is booked and consideration is received before the issuance of completion certificate. If it is like that, it is exempt. Why? Because it's already taxed under construction service, so it is exempt. Property remaining unbooked on the date of issuance of completion certificate or first occupation. So sale of building visa, that's neither supply of goods nor supply of services. So property is remaining unbooked. So in this case, so it is taxable under reverse charge, where the promoter will have to pay taxes. Long-term lease of land, 30 years or more, by any person against consideration in the form of upfront amount, such as premium, salami, cost price, development charges, or by any other name, and a periodic rent or construction of project by a promoter. Long-term lease of land, it can be for 30 years or more, by any person against consideration in the form of upfront amount. It can be called as premium, salami, cost price, development charges, or by any other name, and a periodic rent for construction of a project by a promoter. So same like the previous case, if it is for other than the residential apartment, it is yes taxable under RCM. If it is residential apartment, we have to check whether it is issued, the consideration is received before the issuance of completion certificate or first occupation, then it is exempt. If it is later, like property is remaining unbooked on the date of completion certificate or first occupation, then it is taxable under reverse charge. Any other exemptions? Yes. One-time upfront premium. So one-time upfront amount such as premium, salami, cost price, development charges, or by any other levy service by way of granting long-term lease. Long-term means 3 years or more. That is what is long-term. Long-term lease of industrial plots or plots for industrial development of infrastructure or financial business. So long-term lease means 30 years or more, and it is lease of industrial plots or plots for development of infrastructure or undertakings, or by any other entity having 50% or more of the ownership of the central government, state government, union territory, to industrial units or the developers in any industrial or financial business area. So that means if you are going to exemption which we saw in supply also, supply chapter under schedule 2. So if it is going to be long-term lease, and it is long-term means 30 years or more, and if it is going to be of industrial plots or plots for development of infrastructure, then it should be provided by state government industrial development corporations or undertakings, or by any other entity having 50% or more of the ownership of the central government, state government, union territories, and to whom you should lease, it should be to industrial units or the developers in any industrial or financial business area, then it is exempt. So for the purpose of this exemption, the central government, state government, or union territory shall have 50% or more ownership in the entity directly or through an entity which is wholly by the central government, state government, or union territory. This is with regard to this service. Next, services by way of renting of motor vehicle designed to carry passengers, where the cost of fuel is included in the consideration charge from the service recipient provided to a body corporate. Renting of motor vehicle by other than a body corporate makes body corporate charging GST. So if it is going to be body corporate charging GST at 12% or 5%, then it is forward charge. Other than a body corporate, to a body corporate, to other than a body corporate, to a body corporate, and he issues an invoice without charging tax, taxable under forward charge. So other than a body corporate, to a body corporate, where he issues an invoice without charging tax, then it is under reverse charge. Where other than body corporate, they issue an invoice charging tax at 12%, 6% CGST, 6% SGST, it is taxable under forward charge. Where the service is provided by other than a body corporate to other than a body corporate itself, in forward charge. So only in one case it will be reverse charge, by other than a body corporate to a body corporate, and where the invoice issued does not contain any taxes, it is taxable under reverse charge. Are there any exemptions? Yes. Services provided by way of hiring, giving on hire to a state transport undertaking, a motor vehicle meant to carry more than 12 passengers. So a motor vehicle meant to carry more than 12 passengers, or to goods transport agency means for transportation of goods. So you are going to provide the service. Services may way of giving on hire to a goods transport agency, a motor vehicle meant to carry more than 12 passengers, or to a goods transport agency, a means of transportation of goods, motor vehicle for transport of students, faculty, staff. So if you're going to transport students, faculty, and staff, and to those persons, motor vehicle is given on hire for providing the services of transportation of students, faculties, and staff to an educational institution providing the services by way of preschool education and education up to higher secondary or equivalent, then it is exempt. If the services by way of giving on hire is provided to a local authority, then an electrically operated vehicle meant to carry passengers more than 12 passengers, then it is chargeable to tax under, then it is exempt. So these are all the exemptions. What are all the ITC conditions? Whether we have to check whether the GST is charged at 12%. If it is charged at 12%, then you have ITC on inputs, input services, and capital goods without any condition. If you charge at 5% only on input services, that also it should be on the similar line of business. Next, services of lending of securities under Securities Lending Scheme 1997 of SEBI as amended read with Circular 119. So there are two services here: facilitating or arranging in securities and lending of securities. So facilitating or arranging in securities, it is no doubt it is a service chargeable under forward charge. Lending of securities, under that there are two transactions. One is lending fees. So lender to borrower, lending fees from B to A. Another one is borrower to intermediary, where he pays some commission to the intermediary. So whatever commission he pays to the intermediary brokerage, that will be under forward charge. Here we are talking only about the lending fee which is paid by the borrower. That will be chargeable to tax under reverse charge at 18% by the borrower. Next, supply of services by a music composer, photographer, artist, or the like, by way of transfer or permitting use or user or the enjoyment of copyright covered under Section 13(1)(a) of Copyright Act 1952, relating to original literary, dramatic, musical, or artistic works. So in this case, if the services are provided to a publisher, music company, producer, or the like, which is taxable under reverse charge mechanism. So therefore, whenever there is a supply of services by this music composer or photographer, artist, when they're providing it to a publisher, music company, or producer by way of temporary transfer or permitting use or enjoyment of copyright, then it is chargeable to GST under reverse charge mechanism. Next, supply of services by an author by way of transfer or permitting use or enjoyment of copyright covered under Section 13(1)(a) of the Copyright Act, relating to original literary works to the publisher. So when an author is going to transfer his copyright to publish his book, what will be the tax, whether it is going to be forward charge or reverse charge? Earlier it was covered under reverse charge, but then they brought the condition that author has taken registration under the CGST Act. First condition. Second condition, filed a declaration in the form at Annexure 1 within the time limit prescribed thereon. The jurisdictional CGST or SGST commissioner, as the case may be, that he exercises the option to pay tax GST under forward charge. So he has to give a declaration stating that the person exercises to pay option, exercises the option to pay GST under forward charge mechanism, and he also gives a declaration stating that he will not withdraw from that option within a period of 1 year from the date of exercising that option. The author makes a declaration as prescribed in Annexure 2 on the invoice issued by him in form GST invoice 1 to the publisher. So there are three conditions. One is you should have taken the registration under CGST Act, then declaration stating that you will pay tax under forward charge and you will not withdraw from that option. Next is the declaration should also be prescribed as prescribed in Annexure 2. That is, on the invoice issued by him, he has to mention all the declarations. In that case, it is forward charge. Even if one of the condition is not satisfied, then it is reverse charge. Next, any service supplied by any person who is located in a non-taxable territory to any person other than the non-taxable online recipient. So ABC Limited is in US, XYZ Limited is in India. So since XYZ Limited is in India, they are receiving the service, they will have to pay tax under reverse charge. So there was one more service under this IGST itself, which is now taken out by way of a notification. So let us discuss that, which is omitted through notification 13/2023, dated 26/9/2023 with effect from 1st October 2023. Entry 10, which provides for reverse charge on following interstate supply of services, has been omitted. So what are the services which is omitted? Services supplied by a person located in non-taxable territory by way of transportation of goods by vessel from a place outside India up to a customs station of clearance in India to a person. Supplier is to a person is importer. So here the supplier of service is a person located in non-taxable territory. Recipient was importer. He was asked to pay tax. He was liable to pay tax under reverse charge. Importer being the goods coming into India, therefore he was liable to pay tax under reverse charge. But when you closely examine, services supplied by person located in a non-taxable territory. So supplier is in non-taxable territory by way of transportation of goods. So that means just because the goods are coming into India, it doesn't mean the importer will be liable to pay taxes. So for a foreign liner, we got a judgment also much earlier from Gujarat High Court in the case of Mohit Minerals. But by way of a notification has come only in the month of September and it is applicable with effect from October. Therefore, there is no GST applicable on ocean freight. So there is no reverse charge payable. So with this, we complete reverse charge. Yeah, so yes. So now let us, so we have completed the chapter, what is supply, what is reverse charge. So let us go into charging section. So charging section, so ideally we should have completed charging section, then come to the reverse charge. So let me move on to the charging section. Yes, 9 subsection 1 charging section. So what it says, subject to the provisions of section 9 subsection 2, there shall be a levy of CGST on all intrastate supply of goods or services or both, except on the supply of alcoholic liquor for human consumption on a value determined under section 15 and at such rates not exceeding 20% as may be notified by the government on the recommendation of the council and collected in such manner as may be prescribed and shall be paid by the taxable person. So intrastate supplies, there is CGST and SGST, and except the supply of alcoholic liquor. So there is no GST or alcoholic liquor. Still the state VAT continues. On what value you will pay GST? On a value determined as per section 15. What rate? It is as per the recommendation of the council, which is notified by the government. So we have to understand what is intrastate supplies. State supplies, section 2, clause 64 of the CGST Act. So what it says, it shall have the same meaning which is assigned to it in section 8 of the IGST Act. Intrastate supply of goods, what it says, supply of goods that is subject to the provisions of section 10, supply of goods where the location of the supplier and the place of supply are in the same state or same union territory shall be treated as intrastate supply. So to compare and determine whether it is intra or interstate, that is the nature of supply. How to determine the nature of supply, whether it is going to be intra or inter? It is based on the location of the supplier and place of supply. So location of the supplier and the place of supply are in same state or same union territory, then it shall be treated as intrastate supply. If the location of the supplier and the place of supply are in different state means then interstate supply. So we have a proviso to this. There are exceptions even to this. The following supply of goods shall not be treated as intrastate supply, namely supply of goods to or by an SEZ developer or SEZ unit. Goods are imported into the territory of India till they cross the customs frontier and supplies made to a tourist referred in section 15. So supply of goods to or by an SEZ. So what is SEZ? Special Economic Zone. So what is Special Economic Zone? So for tax purposes, they are considered as a place outside India. So what does that mean? So whenever you supply goods to an SEZ, it is treated on par with exports. So though it is within India, but still it will be treated on par with exports and it is under zero rated supply. So what are the zero rated supply? One is exports, another one is supplies to SEZ. So in that case, we have to file a letter of undertaking. There are two options: either file a letter of undertaking and don't pay IGST, then claim the unutilized input tax credit, or don't file any letter of undertaking, you pay IGST and claim the refund of the IGST paid. So these are the options for zero rated supplies. If it is supplied by an SEZ unit, then it is treated on par with inputs. So therefore, that will be interstate supply and not intrastate. Goods imported into the territory of India till they cross a customs frontier. So that means India means it extends to 200 nautical miles from the baseline. So only when the goods are crossing the 200 nautical miles and come into it is said to have come into India. So even before they cross the customs frontier, then it is said to be in the course of interstate trade. Supplies made to a tourist, referred in section 15. So section 15, what it says, section 15 of the IGST Act. So tourist means a person who stays not more than 6 months in India. So he's a tourist. For him, it will be IGST charged. Interstate supply, intrastate supply of services, same. It's not interstate, intrastate supply of services as per section 8 of the IGST Act. So what it says, subject to the provisions of section 12, supply of services where the location of the supplier and the place of supply of service are in the same state or same union territory shall be treated as intrastate supply. So both are in the same state or same union territory shall be treated as intrastate supply. Proviso to section 8 subsection 2. Intrastate supply of services shall not include supply of services to or by an SEZ developer or SEZ unit. So here also what they are trying to tell, SEZ unit will not come under this. I mean services to SEZ unit will not be treated as intra, it will be inter. So services to or by SEZ. So to SEZ will be on par with zero rated supplies. That is, it's a zero rated, on par with exports, and services by an SEZ will be treated on par with imports and it will be interstate. Next, section 5 subsection 1. So subject to the provisions of section 5 subsection 2, what it says, there shall be a levy of integrated, that is IGST, on interstate supplies of goods or services or both, except on the supply of alcoholic liquor for human consumption on a value determined under section 15 of the CGST Act and at such rates not exceeding 40% as may be notified by the government on the recommendation of the council, and shall be collected in such manner as may be prescribed and shall be paid by the taxable person. So same thing like section 9 itself, but here it is going to be interstate supplies and it is going to be IGST. So this section 5 subsection 1 proviso, we already learned that there is a amendment. So what is interstate supply? Subject to the provisions of section 10, supply of goods where the location of the supplier and the place of supply are in two different states, two states, Tamil Nadu, Kerala, then they are interstate supply, two different union territories, say Lakshadweep, Andaman and Nicobar, then it is interstate. One state, one union territory, Punjab, Chandigarh, then they are interstate supplies. Supply of goods imported into the territory of India till they cross the customs frontier, so it is interstate. Supply of, subject to the provisions of section 12, subject, supply of services whether location of the supplier and where the location of the supplier and the place of supply are in two different states. two different union territories or a state and a union territory shall be treated as supply of services in the course of interstate trade or commerce. So two different states. If the service is going to be in two different states, then it is interstate. Two different union territories, it is interstate. State or union territory, it is interstate. The supply of services imported into the territory of India shall be treated to be a supply of services in the course of interstate trade or commerce. So whenever there is a supply of service into then it shall be treated as interstate. Supply of goods or services or both, where when the supplier is located in India. So supplier is in India and place of supply is outside India. So supplier is located in India, place of supply is outside India, and the supply of goods or services to or by an SEZ developer or SEZ unit, or supply of goods or services in the taxable territory. So it is made in the taxable territory, but it is not an intrastate supply and it is not covered elsewhere in this section, shall be treated as being made in the course of interstate trade or commerce. So therefore, all these cases, it will be interstate. 9 subsection 2 of the CGST Act. What it says? Petroleum crude, central tax on the supply of petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel shall be levied with effect from such date as may be notified by the government on the recommendation of the council. Section 55, subsection 2 of the IGST Act. The integrated tax on supply of petroleum crude, high-speed diesel, motor spirit, natural gas, and aviation turbine fuel shall be levied with effect from such date as may be notified by the government on the recommendation of the council. So all these may come into force into GST from the notified date. Charging section. So we have completed 9 subsection 1, 9 subsection 2, 9 subsection 3 reverse charge we have completed. There is something called 9 subsection 4. That is also reverse charge, but that is with regard to let me take that. So that is where the supplier is unregistered and recipient is registered. So let me share that screen. Nine subsection 4. So what is 9 subsection 4? Supplier is unregistered, recipient is registered, then the recipient will have to pay tax under reverse charge. So what happened in this case? So earlier when the act was enacted, this was the scenario for all the goods and services which is supplied by an unregistered person to a registered person, then the registered person will have to pay tax under reverse charge. So the industry found it very difficult because for each and every service or goods, we'll have to pay tax under reverse charge. Then what they made? Only if the value is exceeding 5,000 per day, then you have to pay taxes under reverse charge. But that also was very difficult. Then they scrapped the section totally. And in 2019, again, it was said like only on a notified goods or services, this was applicable. So we got a notification stating that this is applicable to a real estate sector. So let us learn this together. The central tax in respect of supply of taxable goods or services or both by supplier who is not registered and it is supplied to a registered person shall be paid by a registered person on reverse charge basis as a recipient. So as a recipient, he will have to pay tax under reverse charge on specified category of goods or services or both and all the provisions of this act. So whatever provisions are there, all the provisions of this act shall apply to that recipient as if he is a person liable for paying the taxes in relation to the supply of such goods or services. So that means supplier is unregistered and recipient is registered only on the specified category of goods or services. The recipient will have to pay tax under reverse charge. So what are this GST rates in real estate sector? The effective rate of GST on real estate sector for the new projects by promoter are as follows. 1% without ITC on construction of affordable houses. So affordable houses area 60 square meter in metros and 90 square meter in non-metros and the value is up to 45 lakhs. So if it is going to be up to that limit, then it is going to be 1% without ITC. If it is going to be 5%, when it is going to be 5% is if it is other than affordable house and if it is going to be commercial apartments such as shops, offices, etc. in a residential real estate project in which the carpet area of commercial apartment is not more than 15% of the total carpet area of all apartments, then it is going to be 5% without ITC. So these are all the rate for real estate. So what are the conditions? First condition is no ITC is available. Second condition, 80% of the inputs and input services other than services by way of grant of development rights, long-term lease of land against upfront payment in the form of premium, salami, development charges, etc. or FSI, including additional FSI, electricity, high-speed diesel, motor spirit, natural gas used in supplying the service shall be purchased from registered persons. So that means 80% of the inputs and input services have to be purchased from registered person. It shall be purchased from registered person. If it is not from registered persons, so however, if the value of input and input services purchased from registered supplier is less than the 80%, then the promoter will have to pay GST on reverse charge basis under section 9 subsection 4 of the CGST Act at the rate of 18% on all inward supplies. So on all inward supplies, the promoter will have to pay if the purchases from registered supply is less than 80%. So the shortfall of 80% he has to pay. Further, where cement is received from an unregistered person. So cement is from an unregistered person means the promoter will have to pay tax at 28% under this reverse charge, even if he has covered that 80%. So capital goods also same thing. He has to pay under this reverse charge at the applicable rates, even if he has covered that 80%. So cement and capital is mandatorily he has to purchase only from registered person. Otherwise, there will be a tax under reverse charge, even if the 80% is covered. A promoter has procured following goods and services other than capital goods and services by way of grant of development rights, long-term lease of land or floor space index for construction of residential real estate project during a financial year. So sand, percentage of input goods and services received during the financial year is 10%. Whether inputs received from registered supplier, yes. Cement, 15% no. Steel, 20% yes. Brick, 15% yes. Flooring tiles, 10% yes. Paint, 5% yes. Architect or designing or CAD drawing, 10% yes. Aluminum windows, plywood, commercial wood, 15% yes. In this example, the promoter, what if you check here, promoter has procured more than 80%. So 85% is covered under this yes only. But still, since cement he has purchased from unregistered person, so he will have to pay tax under reverse charge. So cement and capital goods mandatory to purchase from registered supplier only. A promoter has procured following goods and services other than services by way of grant of development rights, long-term lease of land, upfront premium against upfront premium in the form of premium, salami, development rights, whatever it is. Now, sand, 10% yes. Cement, 15% yes. Steel, 20% yes. Bricks, 15% yes. Flooring tiles, 10% yes. Paint, 5% no. Architect, designing or CAD drawing, 10% yes. Aluminum windows, plywood, commercial goods, 15% no. So if you check here, 80% is covered under registered supplier, and therefore that 80%, since it is covered, there is no requirement to pay tax under reverse charge. A promoter has procured following goods and services other than services by way of grant of development rights, long-term lease of land, high-speed oil, electricity, high-speed diesel, motor spirit, or for construction of residential real estate projects during the financial year. So, sand 10% no, cement 15% no, steel 20% yes, brick 15% yes, flooring tiles 10% yes, paint 5% yes, architect, designing or CAD drawing 10% no, aluminum windows, plywood, commercial wood 15% no. So if you see, only 50% is covered under this category. Yes, other than that, remaining 50% is no. So there is a shortfall of 30% because 80% has to be purchased from a registered supplier, whereas only 50% is purchased from a registered supplier. So for the shortfall of 30%, so what happens is 10%, 15% is cement. For that, we have to pay tax under reverse charge, and remaining 15% again, we have to pay tax. That is, the promoter will have to pay tax under reverse charge. So this is what is section 9, subsection 4, reverse charge mechanism, where the supplier is unregistered and the recipient is registered. Next, we are going to see 9 subsection 5, e-commerce operator, where the tax is payable by e-commerce operator. Let me share the screen. So government may, on the recommendation of the council, by notification, specify category of services, the tax on intrastate supplies and interstate supplies of which shall be paid by the e-commerce operator if such services are supplied through it, and all the provisions of this act shall apply to such e-commerce operator as if he is a supplier liable for paying the tax in relation to supply of such services. So what does this mean? So there are certain categories of services which are notified where the e-commerce operator will have to pay tax. So what are the notified services? Notification 17/2017. Services by way of transportation of passengers by radio, taxi, motor cab, maxi cab, motorcycle. Even omnibus is included here. So there is an amendment. Omnibus, that will also be covered under this e-commerce operator. Next, services by way of providing accommodation in hotels, guest house, inns, clubs, campsites, or other commercial places meant for residential or lodging purposes. So whether such hotels, inns, guest house, clubs, campsite, or any other commercial places are liable to get registered under 22 subsection 1 of CGST Act. So we have to check whether the hotels are liable to get registered under 22 subsection 1. That is nothing but the threshold limit, 40 lakhs for goods. Services, it's 20 lakhs, and if it is going to be in the states of MMNT, Manipur, Mizoram, Nagaland, and Tripura, it is 10 lakhs, and others it is 20 lakhs, like Arunachal Pradesh, AMS UPT, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, and Puducherry and Telangana, it is going to be 20 lakhs. So in this case, if they are liable to get registered, then the hotel only is going to pay the tax, is liable to pay the tax. Otherwise, e-commerce operator has to pay the tax. Say, for example, Mr. A has gone on a trip to Sikkim, or we can take a trip to Manipur. Say the hotel's turnover is 15 lakhs, the preceding financial year. He has booked a room through OYO. So through e-commerce operator, he has booked. So in this case, whether the hotel has to pay or the e-commerce operator has to pay is a question. So whether the hotel is liable to get registered under 22 subsection 1, it is yes, because the threshold limit for Manipur is only 10 lakhs, and here the turnover is 15 lakhs. Therefore, the hotel only will have to pay the taxes. So will the answer be different if it is going to be Arunachal Pradesh? Yes, because for Arunachal Pradesh, the threshold limit is 20 lakhs. So therefore, it will be the e-commerce operator which is liable to pay the taxes. Services by way of housekeeping, plumbing, such as plumbing, carpentry. Whether such persons are liable to register under 22 subsection 1, yes, then such persons shall be liable to pay the taxes. Otherwise, e-commerce operator. So whoever is providing the service, whether they are liable to register under 22 subsection 1 is the check we have to make. If it is yes, then such persons. Otherwise, the e-commerce operator will have to pay the taxes. One more services like supply of food through e-commerce operator like Swiggy, Zomato, except for from specified premises. So what is that specified premises means? Where the restaurant or the is in the place where the room tariff is exceeding 7,500 rupees. So in that case, if there is any restaurant which is located in a hotel where the tariff of a room is more than 7,500 rupees, they are called as specific. So there, this e-commerce operator will not come. They only will have to pay tax. But otherwise, whenever any supply of food is made through an e-commerce operator, then the e-commerce operator will have to pay taxes under this category 9 subsection 5. So whether the e-commerce operator is liable to pay taxes eligible for threshold limit, no. He has to take a compulsory registration. So e-commerce operator will have to take a compulsory registration under section 24 clause 4. Proviso 1 and 2 of the section 9 subsection 5. Whether e-commerce operator has physical presence in the taxable territory, we have to check. If it is yes, tax payable by the e-commerce operator. If he does not have a physical presence, then whether e-commerce operator has authorized representative in taxable territory is the check we have to make. If it is no, then the tax is payable by the authorized representative in the taxable territory. Or if it is yes, there is a mistake here in this PDF. Whether e-commerce operator has authorized representative in taxable territory, yes means it is tax payable by authorized representative. If it is no, then e-commerce operator. So the side arrow should be yes, down arrow is no. Then the e-commerce operator shall appoint a person in the taxable territory for the purpose of paying the taxes, and such person shall be liable to pay taxes. Who is an e-commerce operator? E-commerce operator is a person, means any person who owns, operates, and or manages digital or electronic facility or platform for electronic commerce. So e-commerce operator means it is only online and where there is very, very minimum human intervention. So this is section 9. So we have completed the entire section 9. So since we are going with the section, with the flow of sections, let me also complete section 8. So section 8 is tax liability on composite and mixed supplies. So for that, we have to understand what is composite supply. So what is composite supply? Composite supply is defined under section 2 clause 29. Means a supply made by a taxable person to a recipient consisting of 2 or more taxable supplies of goods or services or both or any combination thereof, which are naturally bundled and supplied in conjunction with each other in the ordinary course of business, out of which one is a principal supply. So that means it should be a supply made from a taxable person to a recipient, and it should contain 2 or more taxable supplies or any combination thereof. It can be goods or services or any combination, both or any combination thereof, which are naturally bundled. So it should be naturally bundled and it's supplied in conjunction with each other in the ordinary course of business, where one of them is a principal supply. So what is principal supplies? Supply of goods or services which constitutes a predominant element of a composite supply, to which any other supply forming part of a composite supply is ancillary. So predominant element for composite supply and the other supplies are ancillary. So that means, say for example, I'm ordering a laptop. Say along with laptop, I'm doing packing, say durable packing, then transportation, then insurance, all this. So each one will be taxable at one rate, but the entire amount, one amount is charged. So what happens is, this is a composite supply because it is naturally bundled and made in conjunction with each other. Had there been no supply of laptop, there won't be any packing, insurance, or transportation. So this is a composite supply. In case of composite supply, now there are so many rates. Which rate to adopt? So it is the tax liability which shall be determined based on the supply, which is a principal supply. So principal supply only we have to take. So that is what is the tax liability on composite supply. What is mixed supply? So basically we have to see what is mixed supply. So here again it is given where goods examples where the goods are packed and transported with insurance. The supply of goods, packing material, transport and insurance is a composite supply, and supply of goods is a principal supply. So all these are forming part of composite supply. The goods supply of goods is a predominant element, that is a principal supply. So whatever rate is applicable for that good, that we have to take. Mixed supply. Mixed supply means two or more individual supplies of goods or services or any combination thereof made in conjunction with each other by a taxable person for a single price, where such supply does not constitute a composite supply. So two or more individual supplies. So that means, say for example, they have themselves given an example. I will take an example of, say you have nuts, badam, pista, walnut, cashew nut, all this in a single package, say 1,000 rupees, it is costing single price. So there is no naturally bundle. It can be sold separately also. Then it does not constitute a composite supply. So in that case, it is going to be a mixed supply. So when it is mixed supply, there are different rates. Say cashew is 5%, badam is 12%, pista is 18%, and this walnut is 28%. So each one is one rate. What rate to adopt? It is based on the supply which attracts the highest rate of tax. So tax liability shall be determined on the supply which attracts the highest rate of tax. So in this case, supply of a package, say example, a supply of package consisting of canned foods, sweets, chocolates, dry cakes, dry fruits, aerated drinks, and fruit juices. When they are supplied for a single price, it is a mixed supply. Each of these items can be supplied separately also, and it is not dependent on each other. And it shall not be a mixed supply if these items are supplied separately. So when they're sold together, it is a mixed supply. Next, there is a circular. How is servicing of cars involving both supply of goods, that is spare parts, and services, labor, where the value of goods and services are shown separately to be treated under GST. So the taxability of supply will have to be determined on a case-to-case basis based on the facts and circumstances. So when the supply is involving both goods as well as services, and the value of supply of goods and services are shown separately, then the goods and services would be liable to tax at that applicable rate, such goods and services separately. Next, whether printing of books, pamphlets, brochures, envelopes, annual reports, leaflets, cartons, boxes, printed with design, logo, name, address, or any other contents supplied by the recipient on of such supplies would constitute a supply of goods falling under Chapter 48 or 49 of the first schedule to the Customs Tariff Act 1975, or supply of services falling under heading 9989 of the Scheme of Classification of Services annexed to Notification number 11/2017 Central Tax Rate. So in the above context, it is clarified that supply of books, pamphlets, brochures, envelopes, annual reports, leaflets, cartons, boxes, etc., printed with logo, design, name, address, or any other content supplied by the recipient of such printed goods are composite supply. And the question whether constitute supply of goods and services would be determined on the basis of what constitutes a principal supply. So what is a principal supply? It is a predominant element of composite supply, and where other supplies are ancillary. So in case of printing of book, pamphlets, brochures, annual reports, and the like, where only content is supplied by the publisher or the person who owns the usage rights to the intangible inputs, while the physical inputs, including paper used for printing, belong to the printer, then supply of printing is a principal supply. So whatever is printed, that is a principal supply. Therefore, such supplies would constitute a supply of service falling under heading 9989 of the Scheme of Classification of Services. In case of printed envelopes, letter cards, printed boxes, tissues, napkins, wallpaper, etc., falling under Chapter 48 or 49, printed with design, logo, etc., supplied by the supplier, recipient of goods, but made using physical inputs, including paper belonging to the printer, predominant supply is that of goods, and the supply of printing of the content supplied by the recipient of supply is ancillary to the principal supply of goods, and therefore such supply would constitute supply of goods falling under respective headings of chapter 48 or 49 of the Customs Tariff Act. So there is one more circular 34. Whether activity of bus body building is supply of goods or service. So this is a case where there is a supply of goods as well as service. So classification would be composite supply, and the goods or service would depend upon which supply is the principal supply, and it may be determined based on facts and circumstances. Whether retreading of tires is a supply of goods or service. So in case of retreading of tires, which is a composite supply, the predominant element is the process of retreading, which is a supply of service. Rubber used for retreading is an ancillary supply. So which part of the composite supply is a principal supply must be determined keeping in view the nature of the supply involved. The value may be one of the guiding factors in this determination, but not the sole factor. So how will you determine which is the principal supply value based on that? But that is not the only factor. So primary question that should be asked is what is the nature of the composite supply, essential nature of the composite supply, and which element is the essential nature imparts to that essential nature. Supply of retreaded tires, where the old tires belong to the supplier of retreaded tires, is a supply of goods, and it will fall under the heading 4012 of the 4012 of the Customs Tariff Act, attracting GST at 28%. So this is with regard to section 8. So we have completed section 7, section 8 and section 9 completely. So what is supply we have completed? We have also completed what is section 8, whether composite and mixed supplies. We have also completed section 9, the charging section, and the petroleum products which are outside the ambit of GST or which may come into GST on a notified date. 9 subsection 3, reverse charge mechanism for goods as well as services. 9 subsection 4, in case where the supplier is unregistered but the recipient is registered. And section 9 subsection 5 with regard to tax payable by the e-commerce operator. So let us take a break here and we will continue further. So welcome back after the break. So let us now start with the composition scheme. So composition levy, this is chapter 3, composition levy. Section 10 deals with this. So what are the rules? Rules are from rule 3 to rule 7. And there is a notification 2/2019. This is for services. So what does section 10 talk about? Section 10 subsection 1. Notwithstanding anything to the contrary contained in this act, but subject to the provisions of section 9 subsection 3 and section 9 subsection 4. So that means 9 subsection 3 and 9 subsection 4 are reverse charge. A registered person whose aggregate turnover in a preceding financial year does not exceed 1.5 crores, and so they will be eligible for this composition levy. And in case of special category states, the limit is only 75 lakhs. So aggregate turnover limit for other than special category states is 1.5 crores, and for special category states is 75 lakhs. So what are all the special category states? Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, and Uttarakhand. So these are all the special category states for which the turnover limit is 75 lakhs. So what is aggregate turnover? Aggregate turnover means the aggregate value of taxable supplies, excluding the value of inward supplies on which tax is payable under reverse charge. So when we say aggregate turnover, we should take only outward supplies into consideration and not the inward supplies. So though we may pay tax on those inward supplies under RCM, that will not be considered as a part of aggregate turnover because it's only for outward supplies. So aggregate turnover of all taxable supplies, exempt supplies, export of goods or services or both, and interstate supply of persons having the same PAN to be computed on all India basis, but excludes CGST, SGST, UTGST, IGST, and cess. So that means only the value should be taken and not the taxes. So in case if a person supplies goods or services referred to in clause B of para 6, so that is nothing, para 6 of schedule 2. So that is nothing but supply of food and also supplies any exempt services, including services by way of extending deposits, loans, and advances, insofar as the consideration is represented by way of interest or discount. The said person shall not be ineligible for the composition scheme under section 10, subject to the fulfillment of all other conditions. So that means, so composition scheme, this section 10 subsection 1 is for goods. So basically, even food is also covered. Supply of food is, though it is service, it is also covered under this composition scheme. And any person who also extends some loans or advances where they receive some interest, so that is generally exempt under this exemptions. So that exempt services also, if they supply, that will not make them ineligible for the composition scheme. So they are very much eligible, and while computing this aggregate turnover, though exempt supplies are included or a part of aggregate turnover definition, but still this particular service where the services are by way of extending loans, advances, deposits, where the consideration is represented by way of interest or discount, that shall not be taken into account. Next, a person who opts to pay tax under clause A, B, or C may supply services. So that means a lower rate of tax. So composition scheme is basically for small taxpayers who cannot afford to pay a higher rate of tax. So for them, lower rate of tax is given. Along with that, there are certain other advantages, like you have to file only annual returns and payment only quarterly. And apart from that, along with that comes the disadvantages as well. No input tax credit and cannot issue tax invoice. So when you pay lower rate, when you opt to pay this lower rate of taxes, you are also eligible to supply some services of value not exceeding 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. So basically, a person who is supplying goods is eligible for composition. He may also supply services. He can also supply services to this extent. That is 10% of turnover in a state or union territory, or 5 lakhs, whichever is higher. So what are the rates of taxes? It is 0.5% of the turnover in the state or union territory. So 0.5% CGST, 0.5% SGST for manufacturer. For supplier of food, it is going to be 2.5% of turnover in the state or union territory in case of CGST, then SGST. And other than these two, it is going to be 0.5% of turnover of taxable supplies of goods and services in the state or union territories. So here we have to understand there is something called taxable supply of goods and services. So in the first two cases, even if you're going to supply anything which is exempt, you have to pay that lower rate of tax. So any of your finished goods which is going to be exempt, a manufacturer is going to supply any finished goods which is exempt, but still on that also he's dealing with both taxable and exempt. So he has to pay on all the goods at 0.5 CGST and SGST he has to pay. So it is not that on exempt supplies he cannot pay, he need not pay. No, it is not like that. If he comes into this composition scheme, he has to pay for all the goods. But in case of other than this manufacturer and supplier of food, that means traders and all, it is enough if they pay only on the taxable supplies and need not pay on the exempt supplies. So need not pay that low rate of taxes under exempt supplies. So there are other conditions. So section 10, subsection 2 read with rule 5, there are other conditions and restrictions for composition levy. So when all these conditions has to be satisfied, he is not engaged in making supply of goods which are not leviable to tax under this act. So that means you cannot get into this composition scheme if you are supplying something which is not leviable to tax. So right now, which is not leviable is only alcohol and this petrol products. So if you are having a restaurant, along with that, you also have a bar associated with alcohol. So you cannot apply for composition scheme. He is not engaged in making interstate outward supply of goods. So you are not eligible for composition scheme if you're going to make any interstate supply of goods. He is not engaged in making any interstate supply of goods through an e-commerce operator who is required to collect. So this has been amended. So you are allowed to supply through an e-commerce operator. So this has been amended. So this is allowed now. So interstate supply or interstate also only outward supply is not permitted. Inward supply is permitted. He is not a manufacturer of ice cream, pan masala, aerated waters, tobacco, and also bricks. So brick has to be included. This is not there in this PDF. So ice cream, pan masala, aerated water, tobacco, and manufactured tobacco substitutes and bricks. So if he's not a manufacturer of these kinds, then he is eligible for composition. He is neither a casual taxable person nor a non-resident taxable person. So we saw who's a casual taxable person when we studied reverse charge. So that means a person who comes from a different state and he does business in a state where he does not have a fixed place of business, and he has to take a registration, compulsory registration at least 5 days prior to the commencement of business, and he also has to make an advance deposit of taxes by estimating his. So advance deposit of tax is nothing but estimated tax. That is, he has to estimate what will be his turnover and pay tax on that. So same way, non-resident taxable person is also like a casual taxable person, but the only difference is he'll come from outside India and he will not have a residence in India. He will also not have a physical business premises. He will also not have a residence in India. So the goods held in, so those persons cannot opt for composition scheme. The goods held in stock by him on the appointed day, or on the appointed day means 1st July 2017, have not been purchased in the course of interstate trade or commerce, or imported from a place outside India, or received from his branch outside the state, or from his agent or principal outside the state where the option is exercised under Rule 3, Sub Rule 1. So whenever you have migrated from the previous regime, that is VAT excise, and you have come into GST, on the appointed day, you should not have any stock of goods which is purchased from outside the state or outside the country, or from any of your branches which is outside the state. The goods held in stock by him have not been purchased from an unregistered supplier, and where purchased, he pays the tax under Section 9, subsection 4. So this is nothing but 9 subsection 4. Whenever you purchase from an unregistered supplier, you have to pay tax under. Reverse charge was the scenario earlier, but now only real estate is notified. So now this simply means you should not purchase from unregistered supplier at all. If you're going to purchase, then you are not liable eligible for composition. He shall pay tax under 9 subsection 3 or 9 subsection 4 on inward supply of goods or services or both. So that means whatever inward supplies you are having, which is taxable under reverse charge, you have to pay at that applicable rate, not at this lower rate. Lower rate is only for outward supplies. So at the applicable rate for reverse charge, that you have to pay. He shall mention the words composition taxable person, not eligible to collect tax on supplies at the top of the bill of supply issued by him. So composition taxable person, he is not eligible to collect taxes at all. So he has to bear from his pocket. So if a product is 100, say 0.5% is the tax. So it's going to be 1 rupee. So he cannot issue bill of supply for 100 plus 1. He has to issue only for 100. That 1 rupee he has to pay from his pocket. So he has to make sure that he mentions these words: composition taxable person not eligible to collect tax on supplies on top of his bill of supply. And he shall also mention the words composition taxable person on every notice board or signboard which is displayed at the prominent place at his principal place of business as well as additional place of business. Next, the registered person, whoever is paying tax under section 10, he need not file. He may not file a fresh intimation every year. So every year he need not file. So he may continue to pay tax under section 10 so long as he satisfies all the conditions and all the provisions of the act and rules. Where more than the registered person, one registered person are having a same PAN, then the registered person shall not be eligible to opt for the scheme under section 10 subsection 1 unless all such registered persons opt to pay tax under section 10 subsection 1. So even say for example A Limited has a registration in Tamil Nadu, Kerala, Karnataka, then they have to opt for all the 3 states. It is not that you can opt only for Tamil Nadu and Kerala and leave out Karnataka. So either you have to opt for all the 3 states, all the state registrations coming under the same PAN, or not opt at all. So that means what they're trying to do is you have to opt for all the registrations under the same PAN. So where more than 1 registrations are having the same PAN, the registered person shall not be eligible to opt for the scheme under unless all the registered persons opt for the scheme. So all the registered person has to opt. The option availed by a registered person under section 10 subsection 1 shall lapse with effect from the date on which his aggregate turnover during a financial year exceeds the limit under section 10 subsection 1. So what is that limit? 1.5 crores in case of other than special category states. Special category states, it's 75 lakhs. So that means, so aggregate turnover during a financial year exceeds the limit. Say for example, until December, it was within the limit of, say it was 1.4 crores. In January, you got a big order for 30 lakhs. Now it 1.7 crores. So from January onwards, you have to withdraw from the composition scheme and come into a regular scheme and start paying tax under section 9. A taxable person to whom the provisions of section 10 subsection 1 apply shall not collect any tax from the recipient on supplies made by him, nor shall be entitled to any input tax credit. So this is the disadvantage. As I said, there are advantages. One is lower rate of tax, other one is annual returns, quarterly payments. So these are our advantages. So along with it comes the disadvantage is you cannot take input tax credit. So you're not entitled to input tax credit, and you can also not you cannot issue a tax invoice. So that means you have to issue only a bill of supply. In that bill of supply, you can issue the value only has to be mentioned and not the taxes. Consequence for violating the provisions of section 10. If the proper officer has reasons to believe that a taxable person has paid tax under 10 section 1 under section 10 subsection 1 despite being not eligible. So you are ineligible, but still you applied for it and you paid it. Then, in addition to any tax that may be payable by him, there shall also be a penalty under and the provisions of section 73 and 74 shall mutatis mutandis. That as it is, the term mutatis mutandis means as it is, it will apply for determination of tax and penalty. So, person paying tax under section 10. If they are eligible to pay tax under section 10, no problem, no consequence. When they are ineligible to pay tax under section 10, but they are paying under this composition scheme, then they have to pay the actual tax. That is the differential tax. Say our product is taxable at 18%, they have paid only at 1%. So differential tax they have to pay plus the penalty under 73 or 74. 73 is not in case of fraud, that is unintentional. 74 is in case of fraud, that is intentional. Intimation for composition levy. Any person who has granted registration has been granted registration on a provisional basis under Rule 24 Sub Rule 1 Clause B and who opts to pay tax under Section 10. So this means who were registered under erstwhile laws, who has been granted registration on a provisional basis under GST. Now he opts to pay tax under Section 10, shall electronically file an intimation in Form GST CFB 01 It has to be duly signed or verified through EVC on the common portal, either directly or through facilitation center, notified by the commissioner prior to the appointed day, but not later than 30 days after the said day, such further period as may be extended by the commissioner. So you have to electronically file whoever has been migrated from the previous registration to GST, they have to, and whoever opts to pay under section 10, they have to file GST CMP 01 within a period not later than 30 days from the said appointed day. Appointed day is 1st July 2017. Where the intimation form GST CMP 1 is filed after the appointed day, the registered person shall not collect any tax from the appointed day, but shall issue bill of supply for supplies made after the said day. So here the effective date is appointed day. So any person who files an intimation under Rule 3 Sub Rule 1 to pay tax under Section 10 shall also furnish the details of stock, including the inward supply of goods received from unregistered person held by him on the day immediately preceding the date from which he opts to pay tax under Section 10, electronically inform CMP 03. So composition 03 on the common portal through a facilitation center notified by the commissioner. So when he has to file this form within a period of 30 days from the date on which the option for composition levy is exercised, or within such further period as may be extended by the commissioner in this behalf. So effective date for composition levy is appointed day. Person who applies for fresh registration. So that means first time you are registering. So any person who applies for registration under Rule 8 Sub Rule 1 under GST first time you are registering, you may get an option to pay tax under Section 10 in Part B. So you will give a tick mark. Whether to pay under Section 10, you will give a tick mark, then you will be considered to as an intention to pay tax under Section 10. So that effective date will be, in case you have applied for registration within 30 days from the date of becoming liable, then the date on which you become liable for registration. So that means your threshold limit has, aggregate turnover has exceeded the threshold limit of 40 lakhs or 20 lakhs means from today within 30 days you have to apply. If you have applied, then that will be taken as the effective date. Hello, I'm in class, I'll call you. Okay, so applied for registration within 30 days of becoming liable. So date on which the person becomes liable for registration. So if you apply for registration within 30 days, then yes, you are, the effective date will be the date on which you became liable for registration. If you have not applied for registration within 30 days of becoming liable, then the date of grant of registration certificate. So whenever you get the registration certificate, that day will be taken as the effective date. Rule 3 Sub Rule 3. Any person, any registered person who opts to pay tax under Section 10. So whoever is opting to pay tax under Section 10 shall electronically file an intimation in Form GST CMP 02, duly signed or verified through EVC on the common portal, either directly or through a facilitation center notified by the commissioner prior to the commencement of the financial year for which the option to pay tax under Section 10 is excised, and shall furnish a statement in Form GST ITC 03 in accordance with the provisions of Rule 44 Sub Rule 4 within a period of 60 days from the date of commencement of the relevant financial year. So this means a person who has already registered under GST but now wants to opt for composition scheme. So he has to electronically file in Form GST CMP 02. And prior to the commencement of the financial year, for which the option to pay tax under Section 10 is exercised, he has to furnish this application in GST CMP 02, and he shall also file a statement in Form GST ITC 03 in accordance with the provisions of Rule 44 Sub Rule 4. Within what period he has to furnish? Within 60 days from the commencement of the relevant financial year. Effective date for composition levy is beginning of the financial year. So beginning of the financial year shall be the effective date for composition levy. Proviso to Rule 3 Sub Rule 3. Any registered person who opts to pay tax under Section 10 for the financial year 2021 shall electronically file an intimation in Form GST CMP 02 duly signed and verified through electronic verification code, because during that time there was a COVID, that was a COVID period, was extended till June 30th. So that is what is given here. So rule, notwithstanding anything contained in Rule 3, Sub Rule 1, Sub Rule 2, Sub Rule 3, a person who has been granted registration on a provisional basis under Rule 24, or who has been granted certificate of registration under Rule 10 Sub Rule 1 may opt to pay tax under Section 10 with effect from the first of the month immediately succeeding the month in which he files an intimation in CMP 02. So that means a person who has been granted registration opt to pay tax under Section 10, that is composition, with effect from the first day of the month immediately succeeding the month in which he files an intimation in GST CMP 02. So after you file your CMP 02, you will granted this composition. So what happens is a person who has been granted a registration on a provisional basis. So from Erstwhile Act, you have come to the this GST, so and you have been granted the certificate of registration that for composition scheme. Then you have to file this GST CMP 02 on the common portal. Apart from that, you also have to furnish a statement in ITC 03. So whoever has furnished this form GST CMP 02, he shall also furnish this form GST ITC 03 in accordance with the provisions of Rule 44, Sub Rule 4, within a period of 180 days from the date on which the person commences to pay tax under Section 10. So what does this mean? So there is a proviso to Rule 33A. The said person shall not be allowed to furnish any Tran 1 after the statement in ITC 03. Rule 44 Sub Rule 4. Person opting to pay tax under composition levy shall pay an amount by way of debit in the electronic cash ledger or electronic credit ledger. So he has to pay an amount by way of debit in electronic cash ledger or electronic credit ledger equivalent to the credit of ITC in respect of inputs contained in semi-finished goods, finished goods, capital goods which are held in stock. So whatever details you have to furnish is, so you have to furnish these details equivalent to the amount like debit by way of debit in the electronic cash ledger or credit ledger, whatever you have to pay, that you have to pay, plus you have to furnish these details. The inputs contained in semi-finished goods, finished goods, capital goods held in stock on the day immediately preceding the date of exercising such option or the date of such exemption. So after payment of such amount, if there is any balance ITC left, that shall lapse. So amount for reversal shall be determined separately for IGST, CGST, SGST and UTGST. Suppose you don't have the tax invoices related to the inputs held in stock, then you have to take the estimated amount. So a registered person shall estimate amount based on the prevailing market price of the goods on the effective date of occurrence of any of the events. So you have to take the market price of the goods. So you have to estimate based on the market price. Compliance under Rule 44, Sub Rule 4. So whatever amount you have determined for reversal, that shall form part of the output tax liability of the registered person. And the details of that amount shall be furnished in form GST ITC 03, where such amount relates to any of the events specified under Section 18, subsection 4, and in form section and form GST 10, that is final return, where it relates to cancellation of registration. So whoever is going to apply for form GST CMP 2, he shall also file a statement in ITC 03 giving the details of the stock of goods. So input tax contained in input tax pertaining to input tax credit pertaining to inputs contained in semi-finished goods, finished goods, and capital goods which are held in stock, so that you can pay back whatever you have taken, whatever credit you have taken. As in composition scheme, there is no input tax credit available, and this has to be certified by a practicing chartered accountant or a cost accountant. So the amount determined for reversal shall be duly certified by a practicing cost accountant or a chartered accountant. And any intimation under Rule 3 Sub Rule 1, Rule 3 Sub Rule 3, Rule 3 Sub Rule 3A in respect of any place of business in any state or union territory shall be deemed to be in respect of all other place of business registered on the same PAN. So what is the validity of composition levy? The option exercised by the registered person to pay tax under Section 10 shall remain valid so long as he satisfied all the conditions mentioned in Section 10 and Rule. This is to satisfy that is not. in section 10 or rule 5. Shall be liable to pay tax for any of the conditions mentioned in section 10 or rule 5, and he shall issue any tax invoice for every taxable supply made thereafter, and he shall also file an intimation. He shall file an intimation for withdrawal from the scheme in form GST CMP 04 within 7 days of the occurrence of such event. So what happens is, if you fail to satisfy any of the conditions or all the conditions, then you have to withdraw from the composition scheme. So for withdrawal, we have to file form GST CMP 04 within 7 days of the occurrence of the event. The registered person who intends to withdraw from the composition scheme shall, before the date of such withdrawal, file an application in form GST CMP 04, duly signed or verified through EVC electronically on the common portal. So a person who intends to withdraw will have to file this form. Where the proper officer has reasons to believe that the registered person was not eligible to pay tax under section 10, he has contravened the provisions of the Act or provisions of this chapter, and he may issue a notice to such person in form GST CMP 05. So he shall issue a notice. So if the proper officer is finding out, then he shall issue a notice in form CMP 05 to show cause within 15 days of the receipt of such notice as to why the option to pay tax under section 10 shall not be denied. Rule 6 sub rule 5. Upon receipt of the reply to the show cause notice issued under Rule 6 sub rule 4 from the registered person in form GST CMP 06, the proper officer shall issue an order. He shall issue an order in form GST CMP 07 within a period of 30 days of the receipt of such reply. He shall either accept the reply or deny the option to pay tax under section 10 from the date of the option or from the date of the event concerning such contravention as the case may be. Rule 6 sub rule 6. Every person who has furnished an intimation under Rule 6 sub rule 2 or filed an application for withdrawal under Rule 6 sub rule 3, or a person for whom an order for withdrawal option has been passed in form GST CMP 7 under Rule 6 sub rule 5 may electronically furnish at the common portal either directly or through a facilitation center notified by the commissioner. So what happens? Whoever has been issued this intimation, he has to file or he has filed an intimation, filed an application for withdrawal. A person for whom that order of withdrawal has been passed in form GST CMP 7, they have to file electronically one statement in form GST ITC 01. So what it shall contain: the inputs, stock of inputs are contained in semi-finished goods, finished goods, which are held in stock by him on the day on which the option is withdrawn or denied. Why? Because so once you are coming under regular scheme, because composition scheme you have withdrawn, so you're going to come under regular scheme and start paying tax under section 9. So you are eligible for the credits. So you have to file this form. So within what period you have to file? Within a period of 30 days from the date from which the option is withdrawn, or from the date of the order passed in form GST CMP 7, as the case may be. 6 sub rule 7. Any intimation or application for withdrawal under Rule 6 sub rule 2 or 6 sub rule 3 or denial of the option to pay tax under section 10 in accordance with Rule 6 sub rule 5 in respect of any place or business in any state or union territory shall be deemed to be an intimation in respect of all other places of business registered on the same PAN. So if there is an intimation or application for withdrawal under Rule 6 sub rule 2 or Rule 6 sub rule 3, or if there is any denial of the option for any respective place of business, shall be deemed to be an intimation for all place of business. So for one place it is denied or one place it is a withdrawn, means it shall be an intimation for all the other places also. So this is for services. So earlier we saw for goods. Now this is included in the section itself. Earlier it came as a notification. Now it is included in the section itself. So what happens is, only for composition, the composition scheme was only for goods, but now we have for services as well. So services, the rate is 3% CGST, 3% SGST, so 6%. And there we saw 1.5 crores as the limit. Here it is 50 lakhs. So aggregate turnover should not exceed 50 lakhs. So whether it is special category or other than special category states, the aggregate turnover should not exceed 50 lakhs. So for the purpose of determining the eligibility of a person to pay tax under this, It shall include the supplies from the first day of April of the financial year to the date from which he becomes liable for registration under CGST Act. So for aggregate turnover, you shall include the entire supplies from the first day of April. But for the purpose of determination of tax payable under this notification, shall not include the supplies from the first day of April till the date he becomes liable for registration. So because what happens is the aggregate turnover, the threshold limit is 20 lakhs. So up to 20 lakhs, that will be counted for the purpose of the aggregate turnover, but you need not pay taxes up to 20 lakhs. So if your turnover is 50 lakhs, you can, within 50 lakhs, you can opt for this scheme. But up to this 20 lakhs, you need not pay. For remaining 30, if you pay, you can pay at 3%, 3%. So value of exempt services by way of extending deposits, loans and advances. So far, the consideration is represented by way of interest or discount shall not be taken into account for the purpose of calculating the aggregate turnover. So what are the other conditions? Supplies are made by a registered person whose aggregate turnover in the preceding financial year was 50 lakhs or below, and he is not eligible to pay tax under section 10(1), that is composition for goods, who is not engaged in making any supply which is not leviable to tax, who is not engaged in making any interstate outward supply, who is neither a casual taxable person nor a non-resident taxable person, who is not engaged in making, now this is removed, who is not engaged in making supplies of ice cream, tobacco, pan masala, and all other goods, where more than one registered persons are having the same PAN issued on the Income Tax Act on supplies by all such registered person, and it is paid at the rate of 3% under this notification. So all the registered persons should come to this 3%. So all have to opt. It's not that only one registration will opt and the other two will not opt. Either you have to opt for all the registrations or not opt at all. The registered person shall not collect any tax from the recipient on supplies made by him, nor he shall be entitled to any credit of input tax. The registered person shall issue instead of tax invoice. So instead of tax invoice, he has to issue a bill of supply, which is referred to in section 31 subsection 3 clause C of the CGST Act, and whatever particulars are mentioned in Rule 49 of the CGST rules. The registered person shall mention the following words at the top of the bill of supply. So taxable person. So again, this is coming under composition scheme, so it's going to be the same. So whoever is opting to pay tax under this composition scheme for services, he shall pay at the rate of 3% on all outward supplies, notwithstanding any other notification. So this section 11 is exempt supply. So if there is an exempt supply also, we have to pay tax under this at 6%, 3% CGST and 3% SGST. The registered person opting to pay tax, central tax at the rate of 3% under this notification shall be liable to pay central tax on inward supplies on which he is liable to pay tax under 9 subsection 3, or as the case may be under 9 subsection 4 of CGST Act at the applicable rates. So on the inward supplies, that is where tax is liable to be paid under reverse charge, he has to pay at that applicable rate. So this is what is composition levy. We have completed what is composition. Now let us move on to time of supply. So basically, what is time of supply? So it answers the question when to pay tax. That is what is time of supply. So we have three, like time of supply, value of supply, and place of supply. So when to pay tax is answered by this time of supply. The question of on what value to pay tax is answered by value of supply, and where the tax is triggered is answered by place of supply. So let us see the time of supply. After completing time of supply, we move on to place of supply. So time of supply, section 12, 13, 14. So section 12 deals with section time of supply for goods. Section 13 deals with time of supply of services, and 14 in case of change in rate of taxation. So time of supply of goods. So time of supply of goods shall be based on the below subsections. So subsection 2, that is the general rule, that is for forward charge mechanism. So it is there, amount received in excess and others. So what is the provision is date of issue of invoice or the last date on which the invoice should have been issued under section 31, whichever is earlier. So well, let us understand what is that last date. Section 31 subsection 1, where the supply involves movement of goods. So whether the supply involves movement of goods, if it is yes, then before or at the time of removal of goods for supply to the recipient, I have to raise an invoice. So I order for 10 air conditioners today. Say tomorrow it is removed and it is delivered. So tomorrow's date is 29th. So I'm ordering from Ratna Fan House. So Ratna Fan House has to issue an invoice either on 29th or before that, not after that. If they issue an invoice on 30th or 31st, automatically the last date, that is the date of removal, that days will be taken as the time of supply. So on or before the date of removal of goods. Next is if the supply does not involve movement before or at the time of delivery of goods or making available the goods to the recipient. So at the time it is made available to the recipient, that date will have to be taken as the last date. So it is either the date of issue of invoice or at the time it is made available to the recipient. So that means where the goods does not involve movement of goods, say huge machinery where you cannot move that, you will take the spare parts, go and assemble in the factory. So one fine day it will be made ready and it will be available to the recipient for use. So that day will be taken as the last date on which the invoice should have been issued. So this is the last date. So date of issue of invoice or last date on which the invoice should have been issued, whichever is earlier. So amount received in excess. What is that amount received in excess? Say a recurring supplier. Every month I get the raw materials from him. So what I'm doing? So say this month the bill was 98,000. So I paid 1 lakh. So next month I will adjust. So what happened? The supplier received 2,000 rupees excess. So here the amount exceeds 1,000 rupees. If it is exceeding 1,000 rupees, it should be the date of issue of invoice or last date on which the invoice should have been issued, whichever is earlier. So that is the provision. If it is not exceeding rupees 1,000, date of subsequent invoice, the option of the supplier. So in our example, it has exceeded 1,000 rupees. So for the entire 1 lakh, it is going to be date of issue of invoice or last date on which the invoice should have been issued. If it is, this is in case if it exceeds 1,000 rupees. If it is not exceeding rupees 1,000, then the date of subsequent invoice at the option of the supplier. So what is that subsequent invoice? So next month's invoice, that day will be taken. So next invoice, say it is issued on first invoice. This month it was issued on 10th April. Next month it is issued on 10th May. That day's invoice will be taken. That day will be taken as the time of supply for that excess amount. Say if it is not exceeding 1,000 rupees. Say it is 99,500. I received 1 lakh. 500 rupees only I received excess. So this is not exceeding 1,000. So for that 500, it will be next month invoice. In case of advance, so in case of advance, if it is going to be a composition taxpayer, date of receipt of advance. If it is not a composition taxpayer, date of invoice, date of issue of invoice, or last date on which the invoice should have been issued under section 31, whichever is earlier. So composition taxpayer means date of receipt of advance. Other than composition taxpayer, in case of advance, you need not pay immediately. It is enough if you pay at the time of invoice or last date on which the invoice should have been issued, whichever is earlier. So what is the definition of date on which the supplier receives the payment? Date on which the payment is entered in the books of accounts of the supplier or date of credit in the bank account of the supplier, whichever is earlier. If somebody has issued a check to us, the recipient has issued a check to us. Say the check is, today he is giving the check 28th. I'm making an entry in my books of accounts. Tomorrow I'm depositing and it is getting credited on say 2nd May. So it will be 28th April or 2nd May, whichever is earlier. Say today I received the check, but it not make an entry. On 2nd May it got credited, on 3rd May I made an entry. So whichever is earlier will be 2nd May. So this is the last date which we saw. Next is what is revised invoice. So if we have applied for registration within 30 days of becoming liable to registration, then this concept of revised invoice will apply. Otherwise, no revised invoice. So whether we have applied for registration within 30 days of becoming liable to registration, yes, means then we have to check whether our recipient is registered. If he is registered, Yes, we have to issue a revised invoice in respect of all the taxable supplies which we effected during the period starting from the effective date of registration till the issuance of grant of registration certificate. So that means today we became liable to registration, we applied within 30 days. So our effective date will be today, but we don't have the registration certificate with us. So we cannot issue a tax invoice. So we would have issued a normal invoice without charging any tax. Now, after getting the certificate, registration certificate from the portal, so that in between period from today till the date on which I receive the registration certificate, for that I have to issue a revised invoice with tax component. So for all of these cases, I have to issue a revised invoice. Now, suppose the recipient is unregistered, if it is going to be intrastate supply, then I can issue a consolidated revised tax invoice. If it is going to be an interstate supply, then we have to check whether the supply exceeds 2.5 lakhs. If it is exceeding 2.5 lakhs, the invoice value, if it's going to exceed 2.5 lakhs, then we have to issue a revised invoice in each of the respective tax supplies. Otherwise, we can issue a consolidated revised tax invoice. Section 31, subsection 3, clause C. In case of registered person supplying exempted goods or services or both are paying tax under section 10. So whoever a person is supplying any exempted goods or services or both are paying tax under section 10, then in that case, invoice will not be issued, bill of supply shall be issued. Section 31, subsection 3, clause B, read with rule 46, proviso 4. In case value of goods or services or both supplied is less than rupees 200. So value of goods or services or both supplied is less than rupees 200. Then whether to issue an invoice or not, we have to check. So we have, for that, we have to see whether the conditions A and B are cumulatively satisfied. If it is yes, then issue a consolidated tax invoice for such supplies at the close of each day in respect of all supplies. So consolidated tax invoice we have to issue. If it is no, then issue a tax invoice for each supply. So whether conditions A and B are cumulatively satisfied. What are the conditions A and B? Supplier is unregistered and the recipient is unregistered and the recipient does not require such invoice. So both the conditions should be cumulatively satisfied. If both the conditions are cumulatively satisfied, then consolidated tax invoice is sufficient. Even if one of the condition is not satisfied, for each invoice we have to issue a tax invoice. For each such transaction, we have to issue a tax invoice, even if the value of goods or services is less than rupees 200. Next, on receipt of advance payment. So whenever there is an advance payment with respect to supply of goods or services or both, the registered person will have to issue a receipt voucher. Now, at the time of advance, they say the tax rate is not determinable, then it shall be taken as 18%. Say nature of supply is not determinable, whether it is going to be interstate or intrastate, then it can be taken as interstate. Next is refund voucher, where receipt voucher is issued on receipt of advance with respect to supply of goods or services or both, but subsequently no supply is made. Say there is no supply made and no tax invoice is issued pursuant thereof. Registered person may issue a refund voucher. Registered person can issue a refund voucher against advance payment made by a registered person. So he shall issue a refund voucher. In case of continuous supply of goods, where successive statement of accounts or successive payments are involved. So whenever there is successive statement of accounts or successive payment are involved, invoice shall be issued before or at the time each such statement is issued, or as the case may be, each such payment is received. So whenever the statement is issued or whenever the payment is received, then I have to issue an invoice. So continuous supply of goods means which is provided or agreed to on a recurrent basis continuously under a contract, whether or not by means of wire, cable, pipeline, or other conduit, and for which the supplier invoices the recipient on a regular or periodic basis and includes supply of such goods as the government may, subject to such conditions as it may notification specify. In case of continuous supply of services, so continuous supply of services, whether due date is ascertainable from the contract. So we have to check whether due date is ascertainable. So in case of continuous supply of services, where the due date is ascertainable from the contract, the invoice shall be issued on or before the due date of payment. So that is what is continuous supply of service. In case where the due date is not ascertainable, then invoice shall be issued on or at the time when the supplier receives the payment. So we have to check whether there is a due date which is ascertainable from the contract. If it is yes, invoice shall be issued on or before the due date. If it is no, at the time when the supplier receives the payment, where the payment is linked to the completion of an event. So whenever the payment is linked to a completion of event, invoice shall be issued on or before the date of completion of that event. So that is what is continuous supply of service. Continuous supply of service means a supply of services which is provided or agreed to be provided continuously or on a recurrent basis under a contract for a period exceeding 3 months. So when a service is provided more than 3 months with periodic payment obligation and includes supply of such services as the government may subject to such conditions as it may be notification specified. So it also includes a supply of services. Where supply of services ceases under a contract before the completion of the supply, the invoice shall be issued at the time when the supply ceases. So wherever the supply of services ceases under a contract before the completion of the supply, the invoice shall be issued when the supply ceases. An invoice shall be issued to the extent of the supply made before such cessation. So before even a service is completed, it is ceased, it is the full service is not completed, then supply ceases means to that extent we can issue the invoice. So before the date of cessation, we have to issue the invoice. Section 31, subsection 7 say the goods being taken on approval basis for sale or return are removed before the supply takes place. So whenever it is removed before the supply takes place, then the invoice has to be issued at least shall be issued before or at the time of supply or 6 months from the date of removal, whichever is earlier. So it is removed before the supply takes place. The goods are sent or taken on approval, it's removed before the supply takes place, then within the 6 months from the date of removal or the time or the invoice shall be issued at the time of supply, whichever is earlier. So this is with regard to general rule, that is 12 subsection 2 we have completed with regard to all the other aspects. Now 12 subsection 3 in case of reverse charge mechanism. So what is reverse charge? We know, we studied all the services, goods which are coming under reverse charge. So this is for goods. So it is date of visit of goods, date of payment, or date immediately after the expiry of 30 days from the date of issue of invoice, whichever is earlier. So within this period, we have to, the time of supply applies. So what happens is date of visit of goods is say 20th, date of payment is 25th April, both are April. Say invoice date is 10th March. So from 10th March, calculate the 31st day because date immediately after the expiry of 30 days. So from 10th March, if you calculate the 31st day, it is 10th April. So automatically 10th April will be the time of supply. Date of payment. So what is date of payment? Date of entry in the books of accounts of the recipient. So date of entry in the books of accounts of the recipient or date of debit in the bank account of the recipient, whichever is earlier. So that has to be taken into consideration as date of payment, date of entry in the books of accounts of the recipient or date of debit in the bank account of the recipient, whichever is earlier, will be taken as the time of supply. Section 31, subsection 3, clause F, date of issue of invoice. Where the supplier is unregistered, recipient shall issue an invoice in respect of goods or services or both received by him on the date of receipt of goods or services or both. So what is the date of issue of invoice? So when the supplier is unregistered, then recipient, we have to issue a self invoice in respect of goods or services or both received by him on the date of receipt of supply in receipt of goods or services or both. Payment voucher. So whenever we are paying tax under reverse charge under section 9 subsection 3 or 9 subsection 4, then the registered person, that is the recipient, will have to issue a payment voucher at the time of making the payment to the supplier. In case of supply of voucher, so whether the voucher is identifiable at the time of issue, then the date of issue of voucher, otherwise it is date of redemption of voucher. So say for example, you got a voucher worth rupees 5,000 redeemable at Ratna Fund House for a prestige induction stove. So it is identifiable. You cannot purchase anything else except for that prestige induction stove. So it is date of issue of voucher. Now, if it is simply mentioned as Ratna Fund House rupees 5,000, that means you can purchase any product for that matter. So it is not identifiable. So it is going to be date of redemption of voucher, because only when you redeem, you will know what product, and accordingly tax can be fixed rate. Residual rule, 12 subsection 5. So where other rules does not apply, you come to the residual rule, where whether periodical return is required to be filed. So periodically, if you are required to file return, means that means you should be registered under GST. If you are registered under GST, periodically you will be required to file the return monthly or quarterly, whatever it is. So the date on which the return is required to be filed. If it is no, date on which the tax is paid. In case of addition in value of supply, say, so the previous point, we'll have a doubt. In other cases, it is said as date on which tax is paid. See, this whole concept of time of supply itself is determined when to pay tax. So they have simply mentioned as date on which tax is paid. So that means this no category will apply to unregistered persons. Say a person who is liable to register, but he has not registered. So proper officer will make him get registered immediately, and immediately he has to pay the taxes. That is why it is the date on which tax is paid. Subsection 6. In case of addition in value of supply by way of interest, late fee or penalty, or delayed payment of consideration. So whenever there is a due date for payment and the due date for payment has crossed, so it is mentioned in the agreement, if there is a delay in payment, then there will either be an interest or late fee or penalty. Then what will happen? The supplier will have to, the supplier will receive, apart from his value of supply, he will also receive this late fee. Say 1 lakh is the value of supply and 1000 rupees is the late fee. So what will be the time of supply? So date of receipt of such addition in the value of supplier. So that means for 1000 rupees, that is the addition in value. For 1000 rupees, date of receipt of addition. For 1 lakh, it is going to be the general rule, subsection 2, date of issue of invoice or last date on which the invoice should have been issued, whichever is earlier. So this is with regard to time of supply of goods. Now time of supply of services. So 13 subsection 1, what it says, time of supply for services shall be based on the below subsections. 13 subsection 2, general rule. Whether invoice is issued within the prescribed period? Yes. So what is prescribed period? We have to understand. So if it is issued within the prescribed period, so prescribed period in case of supply of service, banking company, insurance, financial institution, including NBFC, is going to be 45 days from the date of supply of service. So this is the case of banking. If case of others, 30 days from the date of supply of services other than banking. So in this case, if invoice is issued within 30 days or other than banking, then it is going to be date of issue of invoice or date of receipt of payment, whichever is earlier. Suppose it is not issued within 30 days, then date of provision, that is completion of service, or date of receipt of payment, whichever is earlier. So say for example, date of completion of service is 10th March. Date of invoice is 12th April. And date of payment, receipt of payment is 20th April. So whether the invoice is issued within the prescribed period? No, because it has to be issued. So 30 days means within 10th April it has to be issued. It is not issued. So automatically the second provision will come. So date of completion of service, provision of service, or date of payment, whichever is earlier. So completion of service is 10th March. So that will be the time of supply. Here also we are seeing whether excess, like any amount received in excess, whether excess amount exceeds rupees 1000. If it is yes, either of these provisions. So for the actual value, what was the provision? Same provision will apply for this excess amount also. If the excess amount is not exceeding 1000, then the date of subsequent invoice at the option of the supplier. So at the option of the supplier, it will be the subsequent invoice. In case of advance, it is going to be date of receipt of advance. So we saw in goods, for in case of advance, only for composition taxpayer it is date of receipt of advance. For other than composition taxpayer, it was not date of advance, it was only the date of invoice or last date on which the invoice should have been issued, whichever is earlier. But in case of services, at the time of receipt of advance, that will be the time of supply. So here, whenever there is an excess amount, say 99,500, but I received 1 lakh. So 500 rupees extra means it is not exceeding 1000. So date of subsequent invoice. Say 98,000, I received 1 lakh means 2,000 rupees. For the entire amount, it is going to be the first or the second version based on the prescribed period. Next here, prescribed period is under section 31, section 2, read with Rule 47, there is a proviso to what it says. Insurer, banking company, financial institution, including NBFC, a telecom operator, or any other class of supplier of service, as may be notified by the government on the recommendation of the council, making taxable supplies of services between distinct persons, as specified in section 25, may issue the invoice before or at the time such supplier records the same in his books of accounts, or before the expiry of the quarter during which the supply was made. So that means whenever a person is making taxable supply of services between distinct persons, which is specified under section 25, then he may issue a invoice. So distinct persons we know like within the same PAN, but there are different registrations. So if there is any stock transfer or if there is any service provided within the same organization, same PAN, coming under the same PAN. So this is applicable to insurance, banking, financial institution, including NBFC or telecom operator. So when they are providing any service to the person coming under the same PAN, then the distinct persons, then the invoice has to be issued before or at the time at which the supplier records the same in his books of accounts, or before the expiry of the quarter, at least before the expiry of the quarter during which the supply is made, then he has to issue an invoice. In case of reverse charge mechanism, what is the provision? Date of payment, or date immediately after the expiry of 60 days from the date of issue of invoice, whichever is earlier. So date of payment means whenever I'm making the payment, date of entry in the books of accounts or date of debit in the bank account of the recipient. So say for example, date of payment is 10th April. Say date of invoice is 1st March. So automatically 10th April will be the time of supply, because 61st day will be later. Like it will be 1st May, because in March it is 30, April it's 30 days, and 61st day will be 1st May. So 1st May or April, whichever is earlier. 10th May, whichever is earlier, means 10th May. So this is the time of supply in case of reverse charge. Associated enterprise. So in case of supply by associated enterprise, where supply of services by associated enterprise, where the supplier of service is located outside India, then the date of entry in the books of accounts of the recipient of supply or date of payment, whichever is earlier. So it is the date of entry or payment, whichever is earlier. Next, in case of supply of voucher, whether voucher is identifiable at the time of issue. If it is yes, then date of issue of voucher. If it is no, date of redemption of voucher. So same which we saw in goods. So it is identifiable. Say for example, you got a voucher from Green Trends for a haircut worth 2000 rupees. So it is identifiable. Say any service, it was like 2000 rupees, any service means it is not identifiable. Residual is required to be filed. If it is yes, due date, I mean the date on which the return is required to be filed. Otherwise, date on which tax is paid. So that means a person is liable to register, and he is registered means he is required to file the return. So whenever he is required to file the return, that will be the time of supply, because the other information will not be available, date of payment, date of invoice. So that's why you are coming to this residual rule. Suppose you are liable to register but have not registered. You have not registered, then the second part, date on which tax is paid. So a proper officer will make you get registered and immediately he will ask you to pay the taxes. So that is what is date on which tax is paid. Next, in case of addition in value for delayed payment. So whenever there is delay in payment of consideration, so there will be an interest or late fee or penalty which you will receive as addition in value. So time of supply shall be date of receipt of such addition in value by the supplier. So this is what is the time of supply in case of addition in value. So whenever there is a delay in payment, say the value of supply is 1 lakh, there is a delay in payment, so I receive 2000 excess. So 1 lakh 2000. The 2000 rupees will be date of receipt of such addition. So for remaining 1 lakh, it is going to be the general rule. Next, change in rate of taxation. Change in rate of taxation. So date of issue of invoice, date of payment. So change in rate of tax, before change in rate of tax, after change in rate of tax. So here how it works whenever there is change in rate of tax. So it is to determine what rate to be adopted. So it goes by the 2 by 3 rule or the rule of majority. So out of the three, say date of supply, date of issue of invoice, date of payment. Out of the three, if two event falls before, then it is going to be old rate. Out of the three events, if two event falls after, it is going to be the new rate. So it goes by the 2 by 3 rule or the rule of majority. So same way which we used to play Sabu 3. So that's how it works here in case of change in rate of taxation. So supply of goods, date of supply of goods or services is before change in rate of tax. So the delta symbol is for change in rate of tax. Date of issue of invoice is before, date of payment is after. So in the first case, two events are before, so old rate. So first we are fixing the rate. And to fix the time of supply, based on the rate, if it is old or new, based on that we have to fix. So when it is old, we have to take the before. So here two are before. So in case of section 14, your date of supply of goods will never be your time of supply. Only it can either be date of issue of invoice or date of payment. So when it is before it, you have to take the date of issue of invoice. Second case, date of supply of goods or services or both before change in rate of tax. Date of issue of invoice after change in rate of tax. Date of payment after change in rate of tax. Rate will be new. So after. So both are after. So 2 is after means new rate. So how will you determine the time of supply? So here both are after, both invoice as well as payment. Then it shall be whichever is earlier. Date of invoice or date of payment, whichever is earlier. Date of supply of goods or services on both is before. Date of issue of invoice is after. Date of payment is before. So two events are before. So old rate. The old rate which is before date of payment. So that is the time of supply. After change in rate of tax. Date of issue of invoice before change in rate of tax. Date of payment after change in rate of tax. Rate is new rate. So both are after. So that will be the, so new rate. So new means which is new we have to take. That is which is after we have to take. So date of payment that will be taken. Supply of goods is after. Date of issue of invoice is before. Date of payment is before. So two events are before. So old rate. So we have to take which is before. So date of invoice or date of payment, whichever is earlier. Next, date of supply is after. Date of issue of invoice is after. Date of payment is before. So out of these three events, two events are after. So new rate. In that new rate, we have to see which is the date of issuance. So which is after. So date of invoice. So this is how this change in rate of taxation works. Date of payment. So what is date of payment for this particular change in rate of tax? So normally in other cases, it is date of entry in the books of accounts of the supplier or date of credit in the bank account of the supplier, whichever is earlier. But in case of change in rate of tax, we have to check whether the amount is credited within 4 working days from the date of change in rate of taxation. So change in rate of taxation, say if it is going to be 1st April, from that 1st April, 4 working days. So within 5th, it has to be credited. Yes, the same provision, date of entry in the books of accounts of the supplier or date of credit in the bank account of the supplier, whichever is earlier. If it is no, date of credit in the bank account of the supplier. So directly it is going to be date of credit in the bank account of the supplier. So this is the provision for time of supply. So we have completed section 12, 13 and 14. Okay. Let us take a 15 minutes break. Let us continue. After the break, let us continue place of supply. Welcome back after the break. Now let us start with the place of supply. So what is place of supply? So basically where the tax is triggered. So that is answered by this place of supply. So place of supply, what is intrastate, what is intrastate, all this we have studied. So it should be section 9. There is a mistake in this Word document, section 8. Yes, supplies in territorial waters. So it starts with section 10, 11, 12, 13, it goes on till 14. So let us see this, all this we have completed. What is intrastate, what is interstate? So this is the India diagram. So this is the baseline. From the baseline, 12 nautical miles, it is territorial waters. Next, it is customs water, 24 nautical miles. Then after that, it extends till 200 nautical miles. That is called the exclusive economic zone. So until then, it is India. So from when the goods are coming from outside India, only if it is going to cross this 200 nautical miles, it is said to have come into India. So this is the India definition. Now coming to the place of supply. So place of supply, basically we have for goods section 10 and 11. Section 10 is place of supply of goods other than the supplies goods imported or exported from India. Section 11 is for place of supply of goods imported into or exported from India. So this is the place of supply for goods. Place of supply for services, we have section 12, 13 and 14. 12 is for where the location of supplier and recipient is in India, and 13 is in case where the location of the supplier or location of recipient is outside India. And section 14 is special provision for payment of tax by supplier of online information and access retrieval service. So this is the special provision where the services which are coming under this online information database access retrieval service, there is a special provision under section 14. Now, moving on to section 10. So this is for goods other than import and exports. Section 10(1)(a), where supply involves movement of goods, whether by supplier or recipient or any other person. Then, say for example, goods are moving from Tamil Nadu to Kerala. The movement can be initiated by the supplier. It can be initiated by the recipient. He himself can send, arrange for a person to transport the goods, or by any person for that matter. So in that case, what will be the place of supply? Location of the goods at the time on which the movement of goods term for delivery to the recipient. So it is the location of goods at the time at which the movement of goods terminates for delivery. So it will be Kerala. It is delivered at the location, that is Kerala location. So it is Kerala will be the place of supply. Section 10, subsection 1, clause B, bill to ship to. So that means it is billed to one party, shipped to other party. Let us take Mr. A, B, C. Mr. A is in Chennai, Tamil Nadu. Mr. B is in Bangalore, Karnataka. Mr. C is in Chennai, Tamil Nadu. So there is a contract between A and B for supply of goods. Now B gives an instruction. Say C is B's customer. So instead of getting the goods from Chennai to Bangalore, then sending it to C, B gives the instruction, send it to my customer in Chennai itself. So what happens? Billing will happen to B. He will get the invoice. Shipping will happen to C. So here the location of the billed party will be taken as the place of supply. So the third party, billed party, will be eligible to take the input tax credit. Next, section 10, subsection 1, clause C, where supply does not involve movement of goods. So where there is no movement at all. Say for example, we are going to purchase a building which is having a ready to occupy office. For office, everything is ready. Furnitures, everything is ready. Just go and occupy. In that case, those furnitures, those goods does not move at all. It is already readily available. So in that case, location of goods at the time of delivery to the recipient. So that particular office where it is located, that place will be taken as the place of supply. Section 10(1)(d), where goods are assembled or installed at site. Place of such installation or assembly. So whenever the goods are installed at factory, assembly or factory. So the classic example is lift and escalator. So assembling happens for this lift and escalator. Earlier systems like computers were also assembled. So where the assembly or installation takes place, that place will be taken as the place of supply. Where goods are supplied on board of conveyance, including a vessel, an aircraft, a train, or a motor vehicle. So on board of conveyance when goods are supplied, then location which the goods are taken on board. So whenever goods are supplied on board of a conveyance, you can see in Indigo, they'll sell their merchandise. So wherever it is taken on board, so that place will be taken as a place of supply. In section 11, it is import and export. In case of import, it is the importation, that is place of importation, that is India. In case of export, where the goods are exported, that is outside India, so no tax. So this is what is with regard to goods. Services. Place of supply of services where location of the supplier and recipient is in India. This section will apply for all the services where the location of the supplier of service and location of the recipient of service is in India. So 12 subsection 2. Place of supply except the services specified in 12 subsection 3 to section 12 subsection 14. So specific services except for the specific services remaining any else is there means this rule will apply, general rule. So those are all specific rules. This is general rule. Made to a registered person, made to any person other than the registered person. If it is made to a registered person, location of that registered person. Made to any person other than the registered person, then we have to check whether the address on record exists. So whether the address on record exists means if the supplier is going to have the recipient's address, then it will be the location of the recipient. Otherwise, it is going to be location of the supplier. Services in relation to immovable property. The services provided by architects, interior decorators, surveyors, real estate agents, any service provided by way of grant of right to use immovable property or for carrying out construction work. Next, accommodation by a hotel, inn, guest house, homestay, club, campsite, including a houseboat. Accommodation in immovable property for organizing any marriage or reception, either official, cultural, religious, or business function. Any services ancillary to the services referred to in clause A, B, and C. So, for all these cases, when it is related to immovable property, it is place where the immovable property is located. In case of location of immovable property or boat or vessel, if the boat or vessel or the property is in India, location at which the immovable property or boat or vessel is located or intended to be located. If it is going to be outside India, location of the recipient. So this is the place of supply. So where the immovable at more than one state or union territory, then the supply of services shall be treated as made in each of the respective state or union territories in proportion to the value of services determined in as per the contract, determined in terms of the contract or agreement entered into. In case there is no contract or agreement, then as per notification 4/2018. So what does this 4/2018 state? Services provided by way of lodging, accommodation by hotel, inn, guest house, club, or campsite by whatever name called, except cases where such property for organizing any marriage or reception, etc. And in cases of supply of accommodation by hotel, inn, guest house, club, or campsite by whatever name called, where such property is a single property located in two or more contiguous zones or union territories or both and ancillary to that services. In that case, it is area of the immovable property lying in each such state or union territory. So we will see an illustration in illustration 2. Services provided by way of lodging, accommodation by houseboat or any other vessel and services ancillary to such services. Time spent by the boat or vessel in such state or union territory, which shall be determined on the basis of declaration made to the effect by the service provider. Illustration 3. So in all these three cases, let us refer to the illustration. The first case, services provided by way of lodging, accommodation by hotel, inn, guest house, club or campsite by whatever name called, and services ancillary to that services. Hotel chain X charges a consolidated sum of 30,000 for stay in its two establishments. One is Delhi, another one is Agra. Where the stay in Delhi is for 2 nights and the stay in Agra is for 1 night. So 2 nights and 1 night. The place of supply in this case is both in the Union Territory of Delhi and Uttar Pradesh. Agra means Uttar Pradesh. So, and the service shall be deemed to have been provided in the Union Territory of Delhi and in the state of Uttar Pradesh. So, it is 2:1 ratio. The value of services provided will thus be apportioned as 2:1 means, so 30,000 we have to apportion as 20,000 and 10,000. Next, services in relation to immovable property, including services of accommodation in any immovable property, for organizing any marriage or reception, and in case of supply of accommodation by hotel, in guest house, club, or campsite by whatever name called, where such property is a single property located in two or more contiguous states or union territories or both, and services ancillary to such services. Area of the immovable property lying in each state or union territory. There is a piece of land of area 20,000 square feet, which is partly in state 1 and 12,000 square feet and partly in state 2. So out of 20,000 square feet, state 1 it is 12,000 and state 2 is 8,000. Site preparation work has been entrusted to T. The ratio of land in the two states works out to 12:8, that is 3:2. So based on the area. So what it says as per the rule, the notification area of the immovable property lying in each state or union territory. So 3:2 ratio. The place of supply is in both state 1 and state 2. The service shall be deemed to have been provided in the ratio of 12:8 or 3:2 in the states or state 1 and state 2 respectively. The value of the service shall be accordingly apportioned between the states. The company C provides a service of 24 hours accommodation in a houseboat, which is situated both in Kerala and Karnataka, in as much as a guest board the houseboat in Kerala and stay there for 22 hours, but it also moves into Karnataka for 2 hours, as declared by the service provider. The place of supply of this service is in the states of Karnataka and Kerala. The service shall be deemed to have been provided in the ratio of 22:2 or 11:1 in the states of Kerala and Karnataka respectively. The value of the service shall be accordingly apportioned between the states. So that means, say 24 hours accommodation in a houseboat. So here the boat is located in both Kerala and Karnataka. Now 22 hours it is there in Kerala and 2 hours in Karnataka. So based on this ratio, 22:2, so 11:1, it will be a portion. Performance-based service. For restaurant and catering services, personal grooming, fitness, beauty treatment, health service, including cosmetic and plastic surgery, location where the services are actually performed. So, where the services are actually performed, that location will be taken as the place of supply. So, location where the services are actually performed. Services in relation to training and performance appraisal. So, training and performance appraisal, if it is provided to a registered person, location of that registered person. If it is provided to a person other than a registered person, then location where the services are actually performed. So, say for example, a soft skills trainer is providing services to a registered person, say to employees of Infosys. Infosys in Bangalore, head office Bangalore, but it is provided to employees in Chennai. Say the bill is raised to Bangalore. So it is going to be, the trainer is in Chennai, so it is going to be IGST. So because it is registered person. Suppose it other than a registered person means where the training is actually provided. So services are actually performed. So it will be Chennai. So it will be CGST and SGST. Event-based service. Section 12, subsection 6, admission to an event. 12, subsection 7, organization of an event. So there are two categories with regard to event-based service. Services provided by way of admission to cultural, artistic, sporting, scientific, educational, entertainment event or amusement park or any other place and services ancillary there too. So if it is related to admission, so you get the ticket, I mean you give them the ticket, you take the money for that and you admit them. So this is related to admission to an event. So be it any educational or cultural, whatever it is, then the place where the event is actually held or where the park or other place is located. Organization of an event. Organization of a cultural, artistic, sporting, scientific, educational, or entertainment event. Supply of services in relation to conference, fair, exhibition, celebration, or similar events, or services ancillary to organization of any of the events or services referred to in clause A, or assigning of sponsorship to such events. If these are provided to a registered person, location of the registered person. If it is provided to a person other than a registered person, if it is provided to a person other than a registered person, then we have to check whether the event is held in India. If it is held in India, then place where the event is held. If it is not held in India, then the location of the registered person. So suppose the event is held in more than one state or union territory, then a consolidated amount is charged for supply of services relating to such event. A place of supply of such services shall be taken as being in each of the respective state or union territories in proportion to the value for services separately collected or determined in terms of an agreement or contract entered into in this regard. Or in the case, if there is an absence in the agreement, in case of no agreement, in the absence of any contract or agreement, such other basis. So what is that such other basis? Notification 4/2018 comes into picture. So what it says, where the services are supplied to a person other than a registered person, and the event is held in India in more than one state or union territory, and a consolidated amount is charged for supply of such services shall be taken as being in each of the respective state or union territories. And in the absence of any contract or agreement between the supplier of service and the recipient, then it shall be determined by application of generally accepted accounting principles. So GAP. An event management company, E, has to organize some promotional events in state 1 and state 2 for a recipient R. 3 events are to be organized in state 1, 2 in state 2. They charge a consolidated amount of 10 lakhs from R. The place of supply of this service is both the states, S1 and S2, state 1 and state 2. The proportion will be based on the generally accepted accounting principles. That is 3 events in state 1, 2 means 3:2 ratio. So it is going to be 6 lakhs and 4 lakhs. Transportation of goods by way of mail or courier, it is omitted from 1st October 2023 wide notification dated 31st July 2023. Passenger transportation service. So in case of passenger transportation service, if it is provided to a registered person, location of that registered person. If it is provided to a person other than a registered person, then where the passenger embarks on a conveyance for a continuous journey. Say for example, if it is provided to employees of, say, Wipro, then the location of that registered person, Bangalore. If it is provided to other than like you and me, if it is provided to an other than registered person, where we embark on a continuous journey. So passenger embarks. So Chennai, Mumbai, and say Ahmedabad means Chennai will be the place of supply where we embark. Where right to passage is given for future use and the point of embarkation is not known at the time of issue of right to passage, then the place of supply service shall be determined with the general rule, according to the general rule. For the purpose of section 12, subsection 9, return journey shall be treated as a separate journey. So return journey will always be a separate journey, even if the right to passage for outward and return journey is issued at the same time. So return journey will be treated as a separate journey. Services on board of conveyance. The supply of services on board of conveyance, including vessel, aircraft, train, motor vehicle, location of the first scheduled point of departure of the conveyance for the journey. So that means on board of conveyance, when food is provided on board, then it is the location of the first scheduled point of departure. Say in flight, movie is displayed, flight, say during Chennai, Delhi, Jaipur. So Delhi to Jaipur it is displayed. So, but still it will be the first scheduled point of departure, Chennai. So that will be the place of telecommunication service. So in case of telecommunication service, it is like 3 categories. One is fixed. It is going to be dish antenna or landline or cable, whatever it is. Next is mobile connection. Next is any other cases. So first is in case of the services by way of fixed telecommunication line. lease circuit, internet lead circuit, cable or dish antenna. The location where the telecommunication line, lease circuit or cable connection or dish antenna is installed for the receipt of services. So this is for first case. Second, in case of mobile connection for telecommunication, internet service and direct to home television services are provided. So in that case, there are two cases. One is prepayment, one is post payment. Post payment, there is nothing difficult because the address of the recipient will be available. So location of the billing address of the recipient. But prepayment, we can do through an agent, selling agent or a reseller of SIM card. So in that case, address of that agent. If it is by any person to the final subscriber, so we go to a shop, we get a recharge, then location where the prepayment is received. Through internet banking or other electronic mode of payment. So we do it through internet banking, then location of the recipient of services on record of the supplier. Apart from these two, any other cases, in case the address on record is available in the address of the recipient, otherwise it is going to be the location of the supplier of service. So where the lease circuit is installed in more than one state or union territory and a consolidated amount is charged for supply of services relating to each such event. Relating to such event, the place or supply of such services shall be taken as being in each of the respective state or union territories in proportion to the value for services separately collected or determined in terms of an agreement or contract entered into in this regard, or in the absence of such agreement or contract or such other basis as may be prescribed in notification 4/2018 IT dated 13/12/2018. So notification 4/2018, what it says, manner of determining proportionate value of service in absence of agreement or contract. So whenever there is no agreement or contract for separately determining or the value of services for each state and union territory, then it is determined based on the Rule 6 of IGST rules in proportion to the number of points lying in each such state or union territory. The number of points in a circuit shall be determined in the following manner. In the case of a circuit between 2 points or places, the starting point or the place of the circuit and the end point of or place of the circuit will immediately constitute 2 points. Any intermediate point or place in the circuit will also constitute a point, provided that the benefit of the lease circuit is also available at that intermediate point. A company T installs a lease circuit between Delhi and Mumbai offices of a company C. The starting point of the circuit is Delhi and the end point of the circuit is Mumbai. So starting point is Delhi, end point is Mumbai. Hence, one point of this circuit is in Delhi and another is in Maharashtra. The place of supply of the service is in the Union Territory of Delhi and state of Maharashtra. The service shall be deemed to have been provided in the ratio of 1:1. That is in the Union Territory of Delhi, state of Maharashtra, respectively. Next, a company T installs a lease circuit between Chennai, Bangalore, and Mysore. So there is an intermediate point here. Bangalore is there. So starting point is Chennai, end point is Mysore, intermediate point is Bangalore. So 1 in Tamil Nadu, 2 in Karnataka. So it is 1:2 ratio. A company T installs a lease circuit between Kolkata, Patna, and Guwahati. So West Bengal, Bihar, and Guwahati is Assam. Offices of company C. There are 3 points here. So in this circuit, there are 3 points. Kolkata is West Bengal, Patna is Bihar, Guwahati is Assam. So 1 point each for this circuit, West Bengal, Bihar, and Assam. So 1:1:1. Banking and other financial services, including stockbroking services. Whether location of the recipient is available on the records of the supplier. If it is yes, then location of the recipient of service. If it is no, means location of the supplier of service. So whenever it is going to be banking, so you go to a bank, you take a demand draft. So when you have an account in that bank, you will have that address. The bank will have the address. So in that case, it will be location of the recipient. Otherwise, it is going to be location of the supplier. Insurance service. Insurance service provided to registered person means location of that registered person. Other than a registered person, location of the recipient of services on the records of the supplier. So other than a registered person means it is location of the recipient of services on the records of the supplier. 12 subsection 14. Advertisement services to central government, state government, a statutory body,
or a local authority. The place of supply of advertisement service to the central government, the place of supply of advertisement service to the central government, state government, statutory body, or a local authority meant for the states or union territories identified in the contract or agreement shall be taken as being in each of the respective state or union territories, and the value of such supplies specific to each state or union territory shall be in proportion to the amount attributable to services provided by way of dissemination in the respective state or union territories, or as may be determined in terms of or agreement entered into in this regard, or in the absence of such agreement or contract on such other basis as may be prescribed. So, the place of supply for advertisement service for central government, state government, or statutory body or local authority, then in that case, it will be taken as value will be taken as for each of the respective state in proportion to the amount attributable to services provided for each respective state or union territories as per the contract. If there is no contract, some other basis. What are the basis? Advertisement in newspapers and publications. Amount payable for publishing that advertisement in all the editions of newspaper or publication which are published in each state or union territory. So let us go to the first example. ABC is a government agency which deals with all the advertisement and publicity of the government. It has various wings dealing with various types of publicity. In furtherance thereof, it issues release orders to various agencies and entities. These agencies and entities thereafter provide the service and then issue invoices to ABC indicating the amount to be paid by them. ABC issues a release order to a newspaper for an advertisement on Beti Bachao, Beti Padhao to be published in the newspaper DEF, whose head office is in Delhi, for the editions of Delhi, Pune, Mumbai, Lucknow, and Jaipur. The release order will have details of the newspaper like periodicity, language, size of the advertisement, and amount to be paid to such a newspaper. So how will it determine the place of supply? So in this case, the publication, it is published in Delhi, Pune, Mumbai, Lucknow, and Jaipur. So it will be in the Union Territory of Delhi, states of Maharashtra, Lucknow is Uttar Pradesh, and Jaipur is Rajasthan. So the amount payable to Pune and Mumbai edition would constitute the proportion of value for the state of Maharashtra, which is attributable to the dissemination in Maharashtra. Amount payable to Delhi, Lucknow, and Jaipur edition would constitute the proportion of value attributable to states of Uttar Pradesh and Rajasthan respectively. So DEF should issue a separate state-wise and union territory-wise invoices based on the editions. Next. Advertisement through printed material like pamphlets, leaflets, diaries, calendars, t-shirts, etc. Amount payable for the distribution of specific number of such material in each state or union territory. As part of a campaign, Swachh Bharat, ABC has engaged a company, GH, for printing of 1 lakh pamphlets at a total cost of 1 lakh rupees to be distributed in the states of Haryana, Uttar Pradesh, and Rajasthan. In such a case, ABC should ascertain the breakup of the pamphlets. So, breakup of the pamphlets to be distributed in each of the 3 states, Haryana, Uttar Pradesh, and Rajasthan, from the ministry or to department concerned at the time of giving the print order. Let us assume that this breakup is 20,000, 50,000, and 30,000 respectively. This breakup should be indicated in the print order. So, what will be the place of supply? So, in this case, printing of 1 lakh pamphlets to be distributed in the states of Haryana, Uttar Pradesh, and Rajasthan. So, place of supply will be Uttar Pradesh, Haryana, Uttar Pradesh, and Rajasthan. Ratio will be, so they have mentioned 20,000, 50,000, 30,000. So, 2:5:3 will form the basis of value attributable to dissemination in each of the 3 states. Separate invoices will have to be issued state-wise by GH to ABC, indicating the value pertaining to that state, that is 20,000 rupees, Haryana 50,000 rupees, and Uttar Pradesh, 20,000 rupees for Haryana, 50,000 rupees for Uttar Pradesh, and 30,000 for Rajasthan. Next. Advertisement in hoardings other than those in trains. Amount payable for the distribution of specific number of such material in each state or union territory. ABC as a part of campaign
Sakshar Bharat has engaged the firm IGST for putting up hoardings near the airports in the 4 metros Delhi, Mumbai, Chennai, and Kolkata. The release order issued by ABC to IGST will have the city-wise, location-wise breakup of the amount payable for such hoardings. So the place of supply will be Union Territory of Delhi, Mumbai, Chennai, and Kolkata. That is Mumbai, Maharashtra, Chennai is Tamil Nadu, and Kolkata is West Bengal. In such a case, the amount actually paid to IGST for the hoardings in each of the 4 metros will constitute value attributable to the dissemination in the Union Territory of Delhi and state of Maharashtra, Tamil Nadu, and West Bengal, respectively. Separate invoices will have to be issued state-wise and Union Territory-wise by IGST to ABC, indicating the value pertaining to that state or Union Territory. Advertisements on train. Amount attributable to each state or Union Territory of length of the railway track in each of the state Union Territory for the train. ABC places an order on KL for advertisement to be placed on a train with regard to the Janani Suraksha Yojana. The length of the track in a state will vary from train to train. Thus, for advertisement to be placed on the Hasrat Nizamuddin Vasco da Gama Goa Express, which runs through Delhi, Haryana, Uttar Pradesh, Madhya Pradesh, Maharashtra, Karnataka, and Goa, KL may ascertain the total length of the track from Hasrat Nizamuddin to Vasco da Gama. From where they will ascertain? From the website indianrail.gov.in. So, place of supply will be Delhi, Haryana, Madhya Pradesh, Maharashtra, Karnataka, and Goa. The value of supply in each of these states will be attributable to dissemination in these states will be in the ratio of length of the track in each of the states and Union Territory. Say if the ratio works out to 0.5 is to 0.5 is to 2 is to 2 is to 3 is to 3 is to 1, and the amount to be paid to KL is 1,20,000. Then the KL will have to calculate the state-wise and Union Territory-wise breakup of the value of service, which will be in the ratio of the length of the track in each state and Union Territory. Example, the state-wise and Union Territory-wise breakup works out to Delhi 5,000 rupees, Haryana 5,000 rupees, Uttar Pradesh 20,000 rupees, Madhya Pradesh 20,000 rupees, Maharashtra 30,000 rupees, Karnataka 30,000 rupees, and Goa 10,000 rupees. Separate invoices will have to be issued state-wise and Union Territory-wise by KL to ABC, indicating the value pertaining to that state or Union Territory. ABC has issued a release order to MN for display of advertisements relating to the Ujjwala scheme on the railway tickets that are sold from all the stations in the state of Madhya Pradesh and Chhattisgarh. The place of supply. So let us go to the provisions first. Advertisement on the back of utility bills of oil and natural gas companies, amount payable to each state or Union Territory for the advertisement on bills pertaining to the consumers having billing address in each state or Union Territory. So first we have to determine the total consumers, then split that to state-wise. So based on that particular state, how many consumers are there? Based on that, the value will be allocated. Railway tickets, advertisement on railway tickets, amount attributable to each state or Union Territory, calculated in the ratio of number of railway stations in each of the state or Union Territory. So based on number of railway stations. ABC has issued a release order to MN for display of advertisements relating to Ujjwala scheme on the railway tickets that are sold from all the stations in the state of Madhya Pradesh and Chhattisgarh. The place of supply. The place of supply of this service is in Madhya Pradesh and Chhattisgarh. The value of advertisement service attributable to these two states will be in the ratio of number of railway stations in each state as ascertained from the railways or from the website indianrail.gov.in. So let us assume that this ratio is 713 is to 251 and the total bill is 9,640. The breakup of the amount between Madhya Pradesh and Chhattisgarh is in this ratio 713 is to 251, works out to 7,130 rupees and the 2,510 rupees respectively. Separate invoices will have to be issued state-wise by MN to ABC, indicating the value pertaining to that particular state. Advertisement on railway station. Amount payable to such radio station, which by virtue of its name is part of each state or union territory. For an advertisement on Pradhan Mantri Ujjwala Yojana to be broadcast on FM radio station OP. The radio stations of OP Kolkata, OP Bhubaneswar, OP Patna, OP Ranchi, and OP Delhi. The release order issued by ABC will show the breakup of the amount which is to be paid to each of these radio stations. So the place of supply of this service will be Kolkata, West Bengal, Bhubaneswar, Odisha, Patna, Bihar, Ranchi, Jharkhand, and Delhi. So the place of supply of OP Delhi is in Delhi, even though the studio may be physically located in another state. Separate invoices will have to be issued state-wise and union territory-wise by MN to ABC. By MN to ABC on the value pertaining to each state or union territory. Advertisement on television channels. Amount attributable to each state or union territory calculated basis the viewership of such channel in each of the such state or union territory, which shall be derived as under. Viewership can be ascertained from the channel viewership figures published by the Broadcast Audience Research Council. Figures for the last week of the quarter is used for calculating viewership for the succeeding quarter, where the channel viewership of more than one state or union territory of that region is calculated in ratio of the population of that state or union territory as determined in the latest census. The ratio of the viewership figures for each state or union territory so calculated when applied to the amount payable for the service shall represent the portion of the value attributable to the dissemination in each state or union territory. So how are we going to determine for this? Let us take an example. ABC issues a release order with QR channel for telecasting and advertisement relating to Pradhan Mantri Kaushal Vikas Yojana in the month of November 17. In the first phase, this will be in the union territory of Uttar Pradesh, Uttarakhand, Bihar, and Jharkhand. The place of supply of this service is in Delhi, Uttar Pradesh, Uttarakhand, Bihar, and Jharkhand. In order to calculate the value of supply attributable to Delhi, Uttar Pradesh, Uttarakhand, Bihar, and Jharkhand, QR has to proceed as under. QR will ascertain the viewership figures for their channel in the last week of September 2017 from the Broadcast Audience Research Council. Let us assume that it is 1 lakh for Delhi, 2 lakhs for region comprising of Uttar Pradesh and Uttarakhand, and 1 lakh for the region comprising of Bihar and Jharkhand. So it is going to be 1 for Delhi, 2 lakhs for Uttar Pradesh and Uttarakhand, and 2 for Jharkhand. Since the Broadcast Audience Research Council clubs Uttar Pradesh and Uttarakhand into one region and Bihar and Jharkhand into another region, QR will have to ascertain the population figures for Uttar Pradesh, Uttarakhand, Bihar, and Jharkhand from the latest census. So by applying the ratio of the populations of Uttar Pradesh and Uttarakhand as so ascertained to the Broadcast Audience Research Council viewership figures for their channel for this region, the viewership figures for Uttar Pradesh and Uttarakhand and consequently the ratio of these viewership figures can be calculated. So how will you determine based on the latest census? You have to take the population. So let us assume the ratio of the population of Uttar Pradesh and Uttarakhand works out to 9:1. So when this ratio is applied to the viewership figures of 2 lakhs, it is going to be 1,80,000 and 20,000 respectively for Uttar Pradesh and Uttarakhand. In a similar manner, breakup of the viewership figures for Bihar and Jharkhand can be calculated. So let us assume the ratio is 4:1. And when this applied to the viewership figure of 1 lakh for this region, the viewership figure for Bihar and Jharkhand works out to 80,000 and 20,000 respectively. The viewership figure for each state works out to Delhi 1 lakh, Uttar Pradesh 1 lakh, 80,000, Uttarakhand 20,000, Bihar 80,000, and Jharkhand 20,000. The ratio is thus 10:18:2:8:2, or 5:9:1:4:1. This ratio has to be applied when indicating the breakup of the amount pertaining to each state. Thus, if the total amount payable to QR by ABC is 20 lakh rupees, the state-wise breakup is 5 lakh rupees Delhi, 9 lakh rupees Uttar Pradesh, 1 lakh rupees Uttarakhand, Bihar 4 lakh rupees, and the 1 lakh rupees Jharkhand. Separate invoices will have to be issued state-wise and union territory-wise by QR to ABC, indicating the value pertaining to that state or union territory. Advertisement in cinema halls. Amount payable to cinema hall or screens in a multiplex in each state or union territory. ABC commissions ST for an advertisement on Pradhan Mantri Awas Yojana to be displayed in the cinema halls in Chennai and Hyderabad. The place of supply of this service is in the states of Tamil Nadu and Telangana. The amount actually paid to the cinema hall or screens in a multiplex in Tamil Nadu and Telangana, as the case may be, is the value of advertisement service in Tamil Nadu and Telangana respectively. Separate invoices will have to be issued state-wise and union territory-wise by ST to ABC, indicating the value pertaining to that state. So it has to be separate invoices for the state of Tamil Nadu and Telangana. So state-wise and union territory-wise, it has to be issued. Next. Advertisement on internet. It is deemed that such service is provided all over India. So amount attributable to each state or union territory calculated basis the internet subscribers in each of such state or union territory, which shall be derived in the following manner. So based on the internet subscribers. So internet subscribers can be ascertained by from the internet subscribers figures published by Telecom Regulatory Authority of India, TRAI. It can be taken from that. Figures for the last quarter of a given financial year will be used for calculating the number of internet subscribers for the succeeding financial year, where the internet subscriber figure is related to a region comprising of more than one state or union territory. The subscriber figures for the state or union territory of that region shall be calculated in the ratio of population of that state or union territory as determined in the latest census. The ratio of the subscriber figures for each state or union territory so calculated when applied to the amount payable for the service shall represent the portion of the value attributable to the dissemination in the state or union territory. So how will we determine? ABC issues a release order to WX for a campaign over internet regarding linking Aadhaar with one's bank account and mobile number. WX runs this campaign over certain websites. In order to ascertain the state-wise breakup of the value of the service, which is to be reflected in the invoice issued by WX to ABC, WX has to first refer to the Telecom Regulatory Authority of India figures for quarter ending March 2017, as indicated on their website try.gov.in. These figures show the service area-wise internet subscribers. There are 22 service areas. Some relate to individual states, some to two or more states, and some to part of one state, and another to another complete state. Some of these areas are metropolitan areas. In order to calculate the state-wise breakup, first, the state-wise breakup of the number of internet subscribers is arrived at. So in case figures of internet subscribers of one or more states are clubbed, the subscribers in each state is to be arrived by applying the ratio of the respective population of these states as per the latest census. Once the actual number of subscribers for each state has been determined, the second step for WX involves calculating the state-wise ratio of internet subscribers. Let us assume that this works out to 8:1:2, and so on for Andhra Pradesh, Arunachal Pradesh, Assam, and so on. The third step for WX will be to apply these ratios to the total amount payable to WX so as to arrive at the value attributable to each state. So separate invoices will have to be issued for state-wise and union territory-wise by WX to ABC, indicating the value pertaining to that state or union territory based on the internet subscribers. Next. Advertisement through SMS. So amount attributable to each state or union territories calculated on the basis of telecom subscribers in each of the state or union territory. So telecom subscribers in a telecom circle can be ascertained from the telecom subscribers figures published by the TRAI. So figures for a given quarter will be used for calculating the subscribers for the succeeding quarter. So we have to take it from TRAI. So we have to calculate the subscribers for the succeeding quarter, where such figures relate to a telecom circle comprising of more than one state or union territory. then the subscriber figures of that state or union territory shall be calculated in the ratio of population of such state or union territory as determined in the latest census. The telecom circle of Northeast covers the states of Arunachal Pradesh, Meghalaya, Mizoram, Nagaland, Manipur, and Tripura. The ratio of population of each of these states in the latest census will have to be determined, and this ratio applied to the total number of subscribers for this telecom circle so as to arrive at the state-wise figures of telecom subscribers. Separate invoices will have to be issued state-wise by the service provider to ABC indicating the value pertaining to that state. So in this case, it is with regard to all these Northeast states. So how will it determine is based on the ratio of population from the latest census. So that will be applied and separate invoices will have to be issued. ABC commissions UV to send short messaging service to voters asking them to exercise their franchise in elections to be held in Maharashtra and Goa. The place of supply of this service is in Maharashtra and Goa. The telecom circle of Maharashtra consists of the area of the state of Maharashtra. Say excluding that they are covered by Mumbai, which forms another circle, and the state of Goa. So when calculating the number of subscribers pertaining to Maharashtra and Goa, you will have to obtain subscriber figures for Maharashtra and Mumbai and then add them to obtain a combined figure. So it has to obtain the figures of the population of Maharashtra and Goa from the latest census and divide the ratio of these two populations. This ratio will have to be applied to the combined figure of subscribers so as to arrive at the separate figures of subscribers pertaining to Maharashtra and Goa. In the ratio of these subscribers, when applied to the amount payable for the short messaging service in Maharashtra circle and Mumbai circles will give breakup of the amount pertaining to Maharashtra and Goa. So separate invoices will have to be issued state-wise by UV to ABC indicating the value pertaining to that particular state. So based on the population, we have to take. The telecom circle of Andhra Pradesh consists of areas of states of Andhra Pradesh, Telangana, and Yanam, an area in Puducherry, Union Territory of Puducherry. The subscribers attributable to Telangana and Yanam will have to be excluded when calculating the subscribers pertaining to Andhra Pradesh. So these are all the definitions. What is continuous journey? Journey for which single or more than one ticket is issued at the same time, either by a single supplier of service or through an agent at supplier of service, and it involves no stopover between any of the legs of journey for which one or more separate tickets or invoices are issued. So for the purpose of this, stopover means a place where a passenger can disembark either to transfer to another conveyance or break his journey for a certain period in order to resume it at a later point of time. So what is continuous journey? Where for a single or more than one ticket or invoices issued at the same time. So it can be single or more than one ticket. And it can be issued by either one supplier or any agent acting on behalf of one or more than one suppliers, and there should not be any stopover. So fixed establishment. What is fixed establishment? A place other than the registered place of business, which is characterized by a sufficient degree of permanence and suitable structure in terms of human and technical resources to supply the services or to receive such services for its own needs. Location of recipient of service means, so recipient, supply received at place of business for which registration is obtained, the location of such place of business. Where there is a fixed establishment elsewhere, then location of fixed establishment. More than one establishment where place of business or fixed establishment, then location of the establishment more directly concerned with the supply of receipt or supply. In the absence of such places, usual place of residence of the recipient. Location of the supplier of service. Supply made from place of business for which registration is obtained, then location of such place of business. Fixed establishment elsewhere, then location of such fixed establishment. More than one establishment where place of business or fixed establishment, location of the fixed establishment most directly connected with the receipt of supply. In absence of such places, usual place of residence of the recipient. Of business. So place of business is ordinary, where the business is actually carried on and includes warehouse, godown, or any other place where a taxable person stores his goods, supplies, or receives goods or services, or both. And a place where a taxable person maintains his books of accounts. So it can be taken that place also. and where a taxable person is engaged in business through an agent. So that agent's place can also be taken as the place of business. Recipient, where the consideration is payable, then the person who is liable to pay the consideration. Where no consideration is payable, person to whom the goods are delivered or made available, or to whom possession or goods, use of the goods is given or made available, that will be taken as a, that will be taken as a recipient. He will be considered as a recipient. Where no consideration is payable for the supply of service. So second one was supply of goods. Then the supply of service means then the person to whom the service is rendered. And any reference to a person to whom a supply is made shall be construed as a reference to the recipient of supply and shall include an agent. So recipient shall also include an agent acting as such on behalf of the recipient in relation to the goods or services or both supply. Supplier. Supplier in relation to any goods or services or both shall mean person supplying the said goods or services or both. So supplier shall mean person supplying the said goods or services or both and shall include an agent acting on as such on behalf of such supplier in relation to the goods or services or both supplied. So this is what is place of supply with services with regard to section 11, 10, 11 and 12. So let us see section 13 and 14. Place of supply of services where the location of the supplier or location of the recipient is outside India. So either of them is outside India. In case of section 12, both of them were in India. Location of the supplier and location of the recipient both were in India. But whereas in case of section 13, either of them are outside India. The provisions of this section shall apply to determine the place of supply of services where the location of the supplier of service or the location of recipient of service is outside India. So place of supply of service except the services specified in section 13 subsection 3 to section 13 subsection 13. So in that case, it is general rule. How will we determine? Place of supply of service except the services specified in 13 subsection 3 to section 13 subsection 13. Then we have to check whether the location of the recipient is available. If it is yes, location of the recipient. If it is no, location of the supplier. Performance-based service. So performance-based service, if it's going to be goods, if it is physically made available, then where the services are actually performed. So if you have a bike or a laptop where you take it for repairs, so where it is actually performed. Electronic means through remote you take, and through call itself you fix the repairs. So that is where the goods are situated at the time of services. Individual, either the individual himself or the authorized representative. So it can be beauty parlor service or any other service where the services are actually fitness, where the services are actually performed. So proviso, where goods are temporarily imported into India for repairs and are exported after repairs without being put to use in India. So only for repair purpose, the goods have come into India, and after repairs, it is taken outside India. Then 30 section 2 shall apply and not this section. So it will be location of the recipient. Next, performance-based service is completed. So supply in relation to immovable property. So it can be services supplied directly in relation to immovable property, including services supplied by experts, estate agents, supply of accommodation by a hotel, in guest house, club, campsite, grant of rights to use immovable property, services for carrying out or coordination of construction work, including that of architects or interior decorators in place where the immovable property is located. So it is going to be the place where the immovable property is located in case of immovable property. Event-based service, so admission or organization of a cultural, artistic, sporting, scientific, educational, or entertainment or celebration, conference, fair, exhibition, or similar events, and of services ancillary to such admission or organization, then the place where the event is actually held. In case of section 13 subsection 3, that is with regard to performance-based service, 13 subsection 4 with regard to immovable property, 13 subsection 5 with regard to event-based service, if it is provided at more than one location, including a location in the taxable territory, and the place of supply shall be the location in the taxable territory. Where services referred to in section 13 subsection 3 or 13 subsection 4 or 13 subsection 5 are supplied in more than one state or union territory. What will be the place of supply? Place of supply shall be taken as being in each of the respective state or union territories. Value of supply shall be in proportion to the value of for services separately collected or determined in respect of, in terms of the contract or agreement entered into in this regard, or in the absence of such agreement or contract, such other basis. The performance-based service, so notification same. So here manner of determining the proportionate value of service in the absence of a contract or agreement. In the absence of contract or agreement between the supplier and recipient of service, the proportionate value of services supplied in different states or union territories is computed in accordance with Rule 7 of IGST rules in the following manner. Services supplied on same goods. Same goods means then it is by equally dividing the value of the service in each of the states and union territories where the service is actually performed. So let us see an illustration. A company C, which is located in Kolkata, is providing the services of testing of a dredging machine. And the testing service on the machine is carried out in Orissa and Andhra Pradesh. The place of supply is Orissa and Andhra Pradesh. And the value of the services, Orissa and Andhra Pradesh, will be ascertained by dividing the value of the service equally between these two states. So whenever there is on the same goods means it is divided equally. Services supplied on different goods. The ratio of the invoice value of goods in each of the respective state or union territories on which service is performed as a ratio of the value of the service performed in each of the state or union territory. So a company C, which is located in Delhi, is providing the service of servicing of two cars belonging to Mr. X. One car is of manufacturer J and is located in Delhi and is serviced by its Delhi workshop. The other car is of manufacturer A and is located in Gurugram and is serviced by its Gurugram workshop. The value of service attributable to the Union Territory of Delhi and the state of Haryana, respectively, shall be calculated by applying the ratio of the invoice value of car J and invoice value of car A to the total value of the service. Service applied to individuals. So it is based on generally accepted accounting principle. A makeup artist M has to provide makeup services to an actor A. A is shooting some scenes in Mumbai and some scenes in Goa. M provides a service, makeup services in Mumbai and Goa. The services are provided in Maharashtra and Goa, and the value of the service in Maharashtra and Goa shall be determined based on the by applying the generally accepted accounting principles. So in case of immovable property, same which we saw in section 12. So in case of hotel, based on the number of nights, and if it is going to be serviced in relation to immovable property, where the property is for organizing any function or reception or marriage of the immovable property. If it is going to be in a houseboat or vessel, then it is the time spent by the boat or vessel. So this we saw in section 2, event based service. So in the absence of a contract or agreement, it is based on the application of generally accepted accounting principle. So it is, if it is going to be in state 1 and state 2, so based on the number of events, like 3 events in state 1 means 3 and 2 events in state 2 means 2, so 3:2 ratio. Now specified services. Services supplied by a banking company or a financial institution or an NBFC to account holders when location of the supplier. The specific services means services supplied by a banking company or a financial institution or an NBFC to account holders means location of the supplier. Intermediary services, so brokerage or travel agent. So these intermediary services is location of the supplier. Hiring of means of transport. If it is going to be vessel and yachts means speedboats. So if it is going to be up to 1 month, location of the supplier. If it is going to be beyond that, it is going to be location of recipient based on section 13 subsection 2. If it is hiring of means of transport related to vessel and aircraft, then it is location of the recipient. Transportation of goods other than by way of mail or courier. So it is destination, place of destination of such goods. Next, taxability of satellite launch services. So place of supply of Satellite launch services supplied by Antrix Corporation Limited to international customers would be outside India in terms of Section 13, subsection 9 of the IGST Act 2017. And such supply, which meets the requirement of Section 26, Clause 6 of IGST Act, constitute export or service and shall be zero rated in accordance with Section 16 of the IGST Act. Where satellite launch service is provided by Antrix Corporation Limited to a person located in India, the place of supply of satellite launch service would be governed by Section 12, subsection 8 of the IGST Act and would be taxable under CGST and UTGST, CGST, UTGST or IGST Act as the case may be. So, if it is provided to a person in India, it will be as per Section 12, subsection 8. If it is going to be provided to international consumers, then it will be outside India. Then Section 13, subsection 9 will apply. Passenger transportation service, where the passenger embarks on the conveyance for a continuous journey. So Chennai, Delhi, Jaipur means Chennai will be the place of supply. Services supplied on board of conveyance. So when the services are provided on board of conveyance during the course of passenger transport operation, including services intended to be wholly or substantially consumed while on board, first scheduled point of departure of that conveyance. Place of supply of service for OIDA service, that is online information database access retrieval service. Location of the recipient of service. Any person who is receiving such services shall be deemed to be located in the taxable territory if any of the following non-contradictory conditions are satisfied. The location of address presented by the recipient of service. So out of these, any two conditions has to be satisfied. Through internet is in the taxable territory. So whatever location of address you presented, that should be in the taxable territory. Credit card or debit card or store value card or whatever card you use for payment, that should be address of the recipient in the taxable territory. IP address of the device used by the recipient is in the taxable territory. Bank account of the recipient in which the account was used for payment is taxable territory. Then country code of the SIM card which is used by the recipient is in taxable territory. Location of the fixed landline through which the service is received by the recipient is in taxable territory. So out of these 7 conditions, any 2 conditions has to be satisfied to determine whether the recipient is in taxable territory or not. So in that case, location of the recipient of service. Suppose online information database access retrieval means any services where the delivery is by information technology over the internet or an electronic network. So it is generally through online only, minimum human intervention, and it is impossible without an information technology. So some of the services are advertising on the internet, providing cloud services, provision of ebooks, movie, music, software, other intangibles through telecommunication networks or internet, providing data or information, retrievable or otherwise to any person in electronic form through a computer network. Online supplies offer digital content, digital data storage, and online gaming. So special provision for payment of tax by a supplier of online information database access retrieval service by any person located in non-taxable territory to a non-taxable online recipient. Supplier or service located in non-taxable territory shall be the person liable for paying IGST. So when a service is supplied to a person located in non-taxable territory by a person located in non-taxable territory to a non-taxable online recipient, then the supplier will have to take a registration. So single registration under simplified registration scheme, and he shall get registered and pay the IGST. So whether the supplier has physical presence in taxable territory, if it is going to be yes, tax payable by the supplier. If it is no, then whether the supplier has authorized representative in taxable territory. If it is going to be yes, here there is a mistake in this PPT, in this document, it is going to be yes here. So tax payable by authorized representative in the taxable territory. If it is no, then the supplier shall appoint one person in the taxable territory for the purpose of paying IGST, and such person shall be the person liable to pay the taxes. So with this, we complete the place of supply. So there is an amendment in one more section is included. Let's go through this amendment. So this is the new section 14A has been included. Special provision for taxability or supply of online money gaming by a person located outside the taxable territory to a person in India. So because the online money gaming has become taxable by virtue of insertion in this Schedule 3, there was a need for amendment in this section also. So new section has been introduced. So in this case, in case of supply of online money gaming by a person located outside the taxable territory to a person in India, providing for liability on the said supplier for payment of IGST on such supply, then what will happen is this person will have to take that is, the supplier will have to take a single registration through a simplified registration scheme. The power of government for blocking access of the public to any information generated or transmitted, received or hosted in any computer resource used for supply of online money gaming by such supplier in case of failure to comply with this above provision. So that means the supplier will have to take a single registration through a simplified registration scheme, and it also provides the power of the government for blocking access by the public to any information is generated, transmitted, or received or hosted in any computer resource for supply of online money gaming by such supplier in case of failure to comply with this provision. So if you don't comply with this provision, they can also block the access. So with effect from 1st October 2023, the new section 14E has been introduced by the IGST Amendment Act 2023. So what it provides is a supplier of online money gaming not located in the taxable territory shall, in respect of supply of online money gaming by him to a person in the taxable territory, he shall be the person liable to pay IGST on that supply. So for the purpose of complying with the above provisions, the supplier of online money gaming shall obtain single registration under the simplified registration scheme referred to in section 14 subsection 2 of the Act. So however, any person located in the taxable territory representing such supplier for any purpose in the taxable territory shall get registered and pay the IGST on behalf of the supplier. Further, that if such supplier does not have a physical presence or does not have a representative for any purpose in the taxable territory, he shall appoint a person in the taxable territory for the purpose of paying IGST, and such person shall be liable for payment of such tax. So if suppose the person supplier does not have a physical presence or does not have a representative for any purpose in the taxable territory, he shall appoint a person in the taxable territory for the purpose of paying IGST, and such person shall be liable for payment of such taxes. In case of failure to comply with these provisions by the supplier of online money gaming or a person appointed by such supplier or both, notwithstanding anything contained in section 69A of the Information Technology Act, any information which is generated, transmitted, or received or hosted in any computer resource shall be liable to be blocked for access by the public in such manner as specified in the IGST Act. Yes. So with regard to place of supply with regard to mail or courier, so what happened was this has been omitted. So in that case, what happened, the place of supply of such transportation of goods other than through mail or courier in cases where the supplier of service or location of the service is outside India shall be determined by the default rule. That is section 13 subsection 2, location of the recipient. If address is available, location of the recipient. Address on record is not available, location of the supplier. That shall be taken. So advertisement sector we have already covered. So with this, we have covered the amendments relating to the supply. So from the beginning, like from morning 7 o'clock, we started with supply and we saw the amendments related to supply section 7. We saw then we moved to reverse charge, then charging section, then studied 9 subsection 4. That is also reverse charge where the supplier is unregistered but the recipient is registered. And we saw section 8. So section 7, 8, 9 completely we saw. Then section 10 composition completely we saw. Section 12, 13, 14 with regard to time of supply completely we covered. And after covering time of supply, we have covered place of supply. So whatever was possible in the 6 hours time and in between, like there were a gap of 15 to 15 minutes. So whatever is possible in this 5.5 hours. So important chapters I tried to cover. So I really thank SICASA for giving me this opportunity to present myself for the CA final students, the important topics for the CA final students. So with regard to exam preparation, I would suggest that because we have 1 day leave in between for every exam, we have 1 day leave in between. So what I would suggest is, as soon as you complete your exam, come back home after after 5 o'clock, your exam gets over. So maximum you may reach home by 6:37. So immediately get fresh up, start your preparation. And you have to complete all your preparation with regard to GST and customs the next day evening itself, night. The other day afternoon, that is the second day afternoon. Say for example, today you had the previous exam. You come back home, you study. The next day is a holiday, you will study the next day. So that means on Tuesday in our example. So afternoon you have an exam. So from morning to afternoon, it should only be your revision of your RTPs, previous years, question papers. All this revision only has to be done. Nothing new should be taken up during the morning of that examination. Morning to afternoon, it should only be your revision of your test papers, revision test papers, your mock test papers, and your previous exams questions. So this should be a revision. The others, everything should be completed in that 1.5 days time. So we have to plan it accordingly. All the very best for your examinations. So when it comes to indirect tax or income tax or indirect matter, the only thing, the volume is high. But trust me, scoring is easier because it is only how you remember all your provisions and apply the provisions. So wherever you remember, it is important to remember the sections, because when you study along with sections, it is easier to remember the as well. And when it comes to GST, everything is interlinked. It's not like your other subjects where you can leave one part and you can study others. Everything is interlinked. Because when you don't have the grip on what is supply, you cannot know what is value of supply, what is time of supply, or what is place. You cannot appreciate. So everything is interlinked. Wherever you go, there will be other sections which is coming in. So it will not be possible for you to leave any chapters as such in GST. So try to cover everything. And these are all the important things, and a lot of amendments have come for this examinations. Like almost all the chapters, there are small amendments. So cover all the amendments and the past exam question papers, revision test papers, and the mock test papers. So with this, I wish you all the very best for your upcoming examinations. Do well, take care of your health, study well, do well. All the best for all your examinations. And thanks once again. I thank SICASA for giving me this opportunity. Thank you so much. Thank you.